Welcome on into the channel. Welcome on into a red day across the board today in the market. We're going to talk about all that stuff. A lot of what I think is happening and kind of the way that I'm thinking about playing this going forward into next week, because I think that there's going to be there are, as we've talked about, right, there are some really good longer term opportunities to pick up some of these stocks at some of these low levels. But there are going to be some short-term opportunities as well. And so I'm looking to take advantage of some of those. One being a biotech play. So we'll talk about that. Of course, I have a bunch of small caps. I consolidated my list by one more. I added just so I had a little more cash, and I haven't really bought any dips. I'm looking for probably next week to do so, and I'm going to try to explain, or at least we'll explain why. So across the board, at least as we are speaking right now, so we got about 2 hours or so until the market closed, so we're going to go to the end of the day because I think it could get wild. I've been seeing a lot of interesting stuff come through. If you guys have access or have been, I think it's becoming a more popular thing these days to kind of get some option flow. And so one of those things, or one of the things I've been noticing is some of the big name techs, Apple, I think Amazon, maybe Microsoft, and even just SPY. I saw some pretty big put orders that expire today that went through. So that this kind of gives me that thought process of we may be really flushing and kind of see a real flush into the close, just because you also have a long weekend too. So it's kind of like that panic sell. It's easy to kind of play with people's emotions. And then the idea that I have is that we flush out today, maybe come in Tuesday and we gap down. Maybe we wake up and it's like futures looking terrible come Monday night and it's like, oh my. And then that's like the final pull. And then we kind of get the bounce. Now, obviously not the final pull, but like, you know what I'm saying? We get a bounce from that point. And I think that that's where you'll start to see. I mean, we're going to look at some names, and I think some of these names get very, very appealing right down at those levels, if not for a quick bounce back trade, but even just for a long-term position. I'll talk about some of the big names, some of the tech names that have been getting destroyed. I think could kind of fit that bill. So today I exited a couple things. I had a JP Morgan put spread. Actually, I talked about in yesterday's video as an example, but I actually was in that, and that they had earnings, and the earnings weren't bad, but they tanked on earnings. So let's pull up JP Morgan here really quick, and then I'll go through kind of what I have hedge wise for SPY. Look at this; it kind of fell right into this range, this zone that I had, that I liked for a balance point. So if JP Morgan can hold up right here, I kind of like it. This could be a good ad zone, I would say, as like a first ad. And then ultimately, if we get a bigger move down, that trend line could be a really good ad with a kind of a risk level down towards like 152-ish or so. I would like to see it kind of hold that area if possible, right? Doesn't have to, but if possible. So that's kind of where I'm looking at there. But I had a put spread because we're at resistance. We're at resistance. So I was like, okay, I'm going to buy a put spread here. And, it hit pretty much. It was for next week, but it pretty much hit my max profit today. So I just exited it because I was like, well, this is, there's no point. I don't need to necessarily hold this all next week in case some crazy news happens and all of a sudden it bounces back. I doubt it would go $10. I actually would need to go about $12 for me to lose completely on it. But I just kind of got out of that because I didn't want to deal with, the potential bounce back or whatever snapback idea. So we'll see. But that is at least that play. And then Alibaba, we had a put spread on that as well. 137, 138 was the two strikes. And so that hit the max profit today, or pretty much. It expires today, but I got taken out at like 98 cents when the max profit is $1. So I took that like, okay, that's fine. I'm not going to worry about that. And that was it. So that's looking pretty good there. And now, across the board here, let me see if I can see. Yeah, we had a pretty big push on the airlines. Let's take a look at Boeing. I haven't looked at Boeing today. Pretty big push on the airlines yesterday. Boeing, not bad. Boeing's actually holding up really well, surprisingly. Boeing's almost like even on the day. So Boeing, I think, is setting up for a pretty big move there. Personally, I'm not in, but it definitely is one that has been setting up really, really nice. It broke this trend line, came back, retested it, held a 50 SMA, and now it's pushing from there. So obviously now you're playing it up towards, potential resistance points, and it's a less appealing entry in my opinion. But nevertheless, it's still an opportunity. I think that this is going to keep going over the next couple months, is at least how I see it. All right, let's look at SPY. Let's take a look at SPY. So here's the overall daily chart on SPY. It doesn't look great. We kind of had this key level that I drew right there from like this morning, I believe. So I wouldn't put too much weight on that line across the screen. But we're kind of coming down. I wouldn't be surprised if we take out this low from, was that Monday? Yeah, it was Monday. I wouldn't be surprised if we take out the low from Monday this coming in the next week, roughly, right? That's kind of what I'm anticipating. So potentially a 450-ish area, which is kind of down towards some of these lows. I know it might seem like a lot, but I don't think that that's out of the question. We'll see how the second half, or at least the next 2 hours go. But that's roughly from here to 450 is like almost 2.5%. That's a lot, but that can easily happen as we've seen in a day. Right? Look at the yesterday's move from the ups from the highs to the lows yesterday. You had a move of 2%, so it can happen in 2 days pretty easily, I think. So we'll see how that plays out, but that's kind of my speculation there. Almost setting up with a head and shoulders pattern. So you here have your left shoulder, here's your head, and then not a huge shoulder there, but kind of your right pointy shoulder on the right-hand side. And now it seems like it wants to come down, or at least it's been pulling down for the second kind of, or that leg down, right, with that head and shoulders pattern. So we'll see if SPY wants to attempt VWAP. So it held that level. The pre-market lows this morning, roughly around 460, and it dipped just below, but pretty much right in line there. And that was a good potential bounce trade. So that's setting up, and it's bounced nicely off those lows. So you have a move from there to where we're at now, about almost about 0.3% or so, which is not bad. But what I personally have is I have some IWM puts, I have some QQQ puts that I picked up. Now, I didn't get SPY puts or anything like that, but I have those. The reason why is because I have the QQQs out to January 19th, so next Wednesday. It's kind of like my hedge in a sense. This is the way I'm kind of viewing these puts. So if we get a flush out, I wouldn't be surprised if we dump under 470 on QQQ. I wouldn't be surprised. Now, obviously, that would have to, a lot would have to happen today. It's honestly almost, even today. It's barely even down. But that 470 was from Monday. It seems like we have some pressure. I wouldn't be surprised if we dump below and hit that 200 SMA at like 365. 365 and 370, those are levels. SPY is in the 400, that's why. So I'm kind of looking at that as a possible spot on QQQ. I think that if we got down to that level, I would be surprised, honestly, if it held up. So we'll see. But that's what I'm thinking on QQQ. And then I have IWM. Look at IWM. I have a couple different puts. I have a 212 and a 210, so kind of like roughly around where we're at right now. One of them is slightly in the money. One's a little bit out of the money. So if we get a bigger move down today to finish out the day, I'll take off the 210s because those expire on Tuesday, but the 212s are expire on Wednesday. So I kind of gave myself an extra day of move there. But I think that we're kind of setting up on the long weekend potentially as that is the opportunity, I think, for that sell-off. So we'll see. All right, Roblox. January 21st call. Take a look. I think Roblox is way lower than, right? Where is Roblox at? 70s, in the 70s. I mean, it's not 90s where it hit up to, it bounced up to, and that would be next week's call. I mean, it certainly could if we get a really big bounce on tech. But personally, I think that I would want to have more time on those. I would not want to have something that short term. That seems pretty short term to me. But I mean, you're down into a range that it's consolidated for a little bit for half the year, half of 2021 after it IPO'd. So, I mean, you got Nancy Pelosi on her side and her husband. They bought some Roblox calls, I believe, out to the end of the year, at least maybe into 2023. So they're long, but they have a $100 strike too. So, but they have plenty of time. So with how volatile the stock has been, right? If you get a couple, nice pieces of news, the news cycle is good, some earnings and whatnot, everything can change, and this stock can be back up over $100 in a matter of a couple of days, couple of weeks. So that's the whole, I guess, thing with Roblox. But you want to have time, so that's the only problem. At least how I see it. But this is getting pretty, let's see, a bounce. Look, nice little bounce here so far on SPY off the lows. Yeah, it's been a nice, I mean, it's, we'll see now if we continue to put in these lower highs. If we get stuffed at VWAP or roughly this 462.50 is kind of a line that I've drawn that seemed like a line or an area of interest. If we get stuffed there and we get rejected again, I would be interested to see if we do break below and go for new lows on the day before the end of the day. We'll see, though. This thing is so volatile. I mean, this SPY moves a lot. SPY has moved $2 in the past half hour already to the upside, not even like 25 minutes. So it could easily, and we'll see. It depends on the acceleration of potential downside. Do we get an acceleration move to the downside, or how does the close go? Do we kind of push back up into the close? I don't know. I've seen a lot of sell orders. I'm seeing a lot of large option flow to the downside, to the put side. So my speculation is that we probably sell off into the close. and set up, I would imagine, for a potential gap down come Tuesday, because it's a long weekend. So we shall see. Let's see. So it's testing that. It's getting close to that VWAP now. We'll see what happens. All right. Okay. Go to the Nasdaq. How's the Nasdaq looking? Broaden things out on the Nasdaq. It's down here. It's kind of weak. It's, it's showing some more pressure on that. Nasdaq's at the 200 SMA, which is interesting. The Dow had a pretty big down day today, but the Dow in general has been holding up better than most, or better than the S&P, better than IWM, and better than the Nasdaq. So the Dow kind of holds its ground on on green days, or I'm saying on red days. Whatever, Dow holds its ground better generally on these huge sell-off days. So if we saw a huge sell-off and everything was down over 1-2%, the Dow probably wouldn't be down that much. But the Dow today it's kind of the opposite. Today the Dow is down the most, but it had a pretty good day yesterday. So it's interesting. Dow I think had a nice day. Yeah, it sold off, but it held up a lot better yesterday. Across the board. Disney, look at Disney. I sold these. I had calls for this, but they got downgraded today and they just dumped off. I mean, I was looking for this 154 to hold, but then they got a price target downgrade or something along those lines that just dumped it. Disney just absolutely just off a cliff. I find it interesting too that despite, I won't say despite, but we're down like a decent amount, right? Down about 0.5% on the S&P. But today has been a day where I've just noticed in small cap land, there are some movers, some low float movers. GFAI is pushing up, SBEV, Pixie, which is good to kind of see that we have Pixie's actually still grinding. Some decent, at least, action there. But I've noticed that like a lot of other stuff is getting just hit pretty hard. Let's look at ARK. ARK is down. Well, not as bad. It could have been worse. ARK is down 1.5% right now. So we shall see how this plays out. But 1.5% on this, and it's in the 70s. Wow, man. I remember when I was looking at this and it was like around $100. I'm like, under 100 could be a good idea for a buy. Maybe it is long term, but look at this. And you got 70s now. So that's insane. The only problem that I have, I honestly would like that for like an IRA position or something like that. Only problem that I have with it is quite simply, I don't necessarily like all the stocks that they're in. So if I don't like the stocks that they're in, then why would I buy it, right? I'd go buy a collection of stocks that I like, that maybe there's some of them that they have, some that they don't. I mean, it's like, that's kind of how I see the ARK play, but I don't know. That's my 2 cents on that. Let's see. SPY, how is it holding up? Let's see. It's still at that roughly at the VWAP level. So that's going to be, and there's also the 50 SMA on the 5 minute, which is, I don't know, maybe that's an area of interest, but it's kind of some indicator convergence, and we kind of have, if it breaks through this, that would look pretty strong into the close. So we'll have to see. But if this can't hold up or can't break back up over 462.50, that's kind of my line of like, okay, if it can't do that, then I would want to be short a lot of, or at least if I was going to take a short on SPY, I would be short SPY. I have short on QQQ out to next week and IWM. So I'm looking at those as I think that if we do see some really big downside on SPY, if we do, those would be more, I guess, prone to some downside is my speculation. Let's take a look at this. I want to go back to FinViz. I want to look at the breadth indicator, right? Essentially, how many stocks are up or versus down today? So today we have, with the red market, makes sense. We see about 6,300 stocks down and about just under 2,000 up. 800 hit new lows, 144 hit new highs, and the SMA, a lot are below the 50 and a lot are below the 200, as we've kind of been seeing as of late. Back to this chart though, back to the heat map. Energy's been good. Energy was up today, or is up, nice. So ExxonMobil is up a good bit. Oil and gas plays are up a good bit. That's holding up, but where else do we see some green? We see some interesting in the banks, right? A lot of the banks are down except Wells Fargo. Wells Fargo has been super strong. Look at Wells Fargo. Look at this thing. Up to almost 3% today. Had a really big push today, an extension. Maybe that's the indication of the top for now. I don't know. But this thing has been super strong. The chart doesn't look like a lot of other banks. Like, for example, I was thinking that JP Morgan might kind of want to potentially, follow suit with the breakout to the upside, but it definitely is not for now. So it's at the trend, much better, risk reward now on JP Morgan. So that's what I was at least looking at too. This is the toughest period of the market since May. I would say that this is a really, if you're looking at just playing the indices, right? There's been a lot of volatility. Whether you kind of look at the volatility indicators or not. So if you go to like VXX and see how VXX is doing, like this is like kind of showing you that, yeah, volatility is generally elevated, but like it's not that high. It was much higher at the beginning of December. It was much higher at other points in terms of spikes. You go back to May, it was a pretty big spike, but this is really, it's been pretty wild because even that, like you're still getting crazy swings intraday. I mean, intraday, intra-week. I mean, if you look at the intra-week on SPY, even if you look at QQQ too, I mean, we have to realize on Monday we were at 456, just under 457. And then we hit up to 473, and now we're back at 462. We were actually we dipped just under 460 today for by 10 cents. And like and that's in 1 week. That's pretty I think pretty wild range, pretty wild action across the board. So in terms of small caps, yeah, I mean, it's been at least from what I have noticed, the longest period of time where I can really feel that like no good news matters, none of that stuff matters. I haven't really seen something this prolonged. I would say, yeah, you go through periods of time like the summertime and stuff like that. That sometimes it's pretty weak and whatever in terms of small cap land, but I haven't seen the drawdown that we've seen this extended for this long. But at the same time, you go back to this time last year, and I think we were all pretty much saying the same exact thing. Never seen this many stocks over $1, this many stocks going to new highs, this many stocks going up 500% over the past couple months, 1,000% over the past few months. So it's like you take it both ways, right? Now you're getting the exact opposite. XBI is what I was looking at too. XBI, now it's not really it got close, so it did get close. I kind of like XBI under 95. Under 95 would be really where I would be saying to myself, how can you look at this thing and say, I don't want to get long. I think this is a really good opportunity to go long. Why? Because look at how sharp a decline this is looking at. Like you're looking at this decline this year. Now, of course, a lot of biotechs did, lead the move up, and they're, almost the definition of speculation, right? So now we're not in a speculative environment. So yeah, I get it. But from where those highs were to now, XBI is down 45%, which is a lot for an ETF like this. It's a lot. And if you look at the past, look at the weekly chart on this thing, it's just like the S&P. It's just like the Nasdaq. It's rigged to the upside, right? Yeah, you have big drawdowns, but a lot of these huge knife downs on the weekly chart are followed by really nice sustained growth periods. Really nice. So I think we could be looking at, this final flush, if you want to call it that, this knife. If we do go sub 95, which I think is very possible, that could be that setup that leads you into a really nice grinder for the next, couple years. Honestly, I wouldn't be a surprise until 2025. Who knows? Obviously, anything can happen in the next couple of years. It can all change like that. But that said, if you just look kind of at the progression of this thing and the ETF overall, I mean, this is setting up to be. I mean, here's your rough trend, right? Here's your kind of rough trend. So yeah, you could be setting up for a really nice grinder for a while, but that initial bounce is kind of where a lot of money can be made very, very quick. So I'm kind of eyeing something like that. Now, okay, you kind of got that today where you hit those lows and you bounce right back up. We'll see, but if it goes sub 95 next week, that's something that I would be looking at. Maybe let's just look out until let's go out to June calls. If you looked out to June calls, and you targeted a $100 strike price or just added the money, maybe 95 roughly, you pay $10. If you get a bigger flush, they're going to be a little bit under $10. So you pay $1,000, and that could double in a very short period of time on a bounce for XBI. I think would not be out of the question. I think also you're going to see what probably is going to happen. This is going to send a lot of stuff down. You're going to hit a lot of charts sitting, new lows after new lows after new lows. What you really need in small cap land or even biotech land is you need a runner. And when I say we're getting some runners here and there, right? But when I say runner, I mean you need, or you're going to get at some point, I think very, very soon, something that goes 500 to 1,000% in 1 or 2 days. Boom, explodes. and then that lights it up. I mean, that would bring a lot of confidence back, I believe, to small cap land. That would bring a lot of confidence back to traders, small caps, and I think that you would see a lot more volume enter some of these plays, and you'd see some stocks that are making bigger moves than just 50% intraday or 40%. I think you'd be seeing some more than that. So that's what you need, and I think you're probably going to get that if we get one really big flush out or something. Let's say next week, or it could be timed up with this holiday weekend too, right? You kind of have today is one of those days where people are like, whatever, doing their thing. SPY got rejected at that level again. So that's kind of an area to watch, I would say, for sure. For puts, for a short entry right here, you're at a pretty good spot. Stop loss would be like roughly over this candle high right here, which is like 462.63 is kind of like the stop loss I would use for if you were to go short right now. So not that really far off. But we'll see if that plays out, if it plays out in that fashion. Growth, even larger tech. Yeah, I mean, even a larger tech plays. Take a look. I mean, Affirm. Affirm was one that I liked a lot too. Affirm, no, I'm not under $70 now. I mean, you're back to levels on Affirm, right? That you were trading at before you got all of those massive partnerships and whatever news and the huge earnings, whatever that sent this thing crazy. You're back to those levels that we're trading at then. So, it could come down a little bit more. Market's weak. Yeah, it can come down like, 65, 60-ish is certainly possible on Affirm. But I mean, this is just even a longer term look, right? I mean, come on, this looks, I mean, I like that. Affirm, some people bought this thing up over $150 and were thinking, I'm going to go long term. I'm going to buy this and hold this in my IRA, or I'm going to hold this thing, for my life because I like this company, like the growth here, whatever. Now you can get that thing at like half price, or really, I mean, like from where those, I mean, more than that, down over 60%, let's say from the highs. You're down over like 60% from the highs, which is nuts. And literally since November. It didn't happen like 17 months ago. This happened literally like 2 months ago, which is insane. So these massive snapbacks, snap downs, whatever, are usually followed by some pretty big extensions or bounce days when the markets are, firming up. And then, things do kind of calm down or start to trend at some point, or, pull back. So like Affirm, what I'd be looking at is like maybe this thing, I can get rid of some of these levels because these are not really holding up. Maybe the firm kind of snaps back, goes to $90, right? I mean, it goes to $100, right? And then it kind of floats back down to like the upper 80s or 90, and then it kind of firms up from there and builds the trend for the next, year or whatever, right? So like that's kind of the idea. And obviously it depends on news flow and earnings reports and stuff, but that's kind of the idea behind it, I would say. Gamestop is at an interesting spot. It's just dropping below these levels now. So yeah, I mean that 115 it needs to kind of hold up. If it can't hold that, it's probably coming down. I would say $100, and then below that. We looked at that I think on the last stream. The problem that I had with it was they're just the options are just too expensive, and it doesn't make any sense. Got to February for puts on this, you want to buy 120 puts, well, then essentially your break even is at like 102 or like whatever, 101.50. I mean, that's still a $15 move roughly from where we're at right now, which it could do. But if you get one day where the thing pops to 150 and all of a sudden the market's green and it's like, kind of like, back to short squeeze plays and whatever for a day or two, even if it's not sustained, or you get some news again or whatever from them, then, that kind of resets your time frame, and those puts that you have now all of a sudden are just that much farther away from going in the money. Even if the trend goes that way and we go sub $100 by, I don't know, by like March, let's just say, then yeah, maybe you get that, but the options may not work out. So you can go maybe like a spread, but even those I believe were too expensive, or they just didn't really make too much sense. So we can look at it now though. I'll just take a peek. If I wanted to go for like a vertical spread on this, and let me look at these 120s. Let's see what the graph says. Oh, these are much better, I think. Yeah, this is actually a lot better. So if I went to February 18th of 2022, I can play a put spread here, and I would be selling the 120s, buying the 125 puts. So it's going to cost me for one of these. It's going to cost me, let's see, scroll back across. Sorry, whatever reason, it just like glitched over. But it's going to cost me $310 for one. And in this case, worst case scenario, I lose 310. Best case scenario, I make 200. So maybe I would want to look at something like a little bit further down. This is probably a better risk reward. Let's see if I can get something closer. Maybe this. the 110s by 115s. I don't know. The risk reward actually looks pretty good in the 120 by 125s. So yeah, you can make $200 as long as GameStop closes under 120 by this expiration date, by February 18th. If it closes under 120, you make $195, and if it doesn't, you risk 300. So it's not bad. I kind of like that, honestly. So I would play that instead of just buying puts. This way, time decay and whatever. You're right now, if GameStop just kind of went flatline at 115 the entire next month and a half, or that's about a month, then you're good. You're fine. You're going to make $200. So that's I would say if there's a way to play that, I'd play it that way on GameStop. All right, let's see. SPY, so it's still getting rejected at that level there. So that's what we're kind of watching. I suspect. Well, this close should be I think it should be really interesting. That's all I'm going to say. I think it's going to be a very interesting close. Do we get the panic sell or the panic buy? My guess is panic sell, but the problem is that maybe because that's my guess, it's probably the guess of a lot of other people. So if everyone's positioned that way, then maybe not. This is also something I've been looking at too. Put call ratios. I was just kind of interested in taking a look at this. They kind of spiked up the past 2 days, really today. They're up a good bit. So when the put call ratio is really high, what does that tell you? It tells you that there's a lot of puts. A lot of people have puts. When the put call ratio is super low, it means there's a lot of calls. And generally there are more calls than puts. But the higher the put call ratio, the closer the signal to the bottom, I believe. Because many times when that happens, if you go back to here, right? We saw just December 3rd, put call ratio hit 0.74. It's pretty high on SPY. So go back to December 3rd. What was that? December 3rd was literally the bottom. December 3rd was this day right here where we dumped just under 450 on SPY and then recovered, to all-time highs, shortly after that. So that's kind of the, I guess, one of the indicators you can use as well to get a feel for where money is positioned and where the majority of traders are and investors are. CRM, let's take a look. CRM is a Pelosi play. Let's take a look at this guy. It's up today. Interesting. Yeah, it's kind of holding up here. They have two tens though. They're definitely down on their position because they bought it like somewhere in here. So they're definitely down, but they have 2 tens, so that's not really a big worry. Either they can add to that position, or if CRM kind of grinds up the next couple of months, 6 to 8 months from now, and gets back to 270 or so, they're going to be green. So it doesn't matter. They'll probably be fine. But if you're looking at CRM as a long now, it's probably in an interesting spot. It's come down a lot off its highs, very, very sharp pullback. If we do see some more downside in the market, yeah, could it come down more? Yeah, but you're in a pretty good spot. If you're buying shares or if you're buying options with plenty of time, probably okay. That's Salesforce. I do kind of like it. So I think it's a good, I would probably, be looking at this thing and say, hey, probably for the next, if you're willing to have patience, it's fine. T finally broke 27. Let's take a look at T. AT&T. Wow, nice. Look at that. This is interesting. I remember this one was selling off, and I was like, I don't really understand why it was selling off so much to the degree it was, from like 27 down to 22, which isn't like a huge, okay, if you're in the tech space or small caps, okay, realistically, oh my, 20% down, big whoop, right? Because some of these things are down half or more. But look at that. It's been super strong. And they pay a nice dividend. So, how can you go wrong? 52 cents per share. That's the only problem with AT&T, though, is that like the overall like trend on this thing really since like 2016 has been kind of bearish. It's just been kind of like, So, I don't know. You get the dividend, I guess, covers you a little bit, but I don't know. NVOS and NSPR. NVOS had news today. They're just playing the small cap market right now. They're really, I would say, more micro cap market. Here's IWC. Here's micro cap ETF. Let's take a look at the daily on this thing. Doesn't look good. I would imagine this thing probably dumps below this support right here, 132. It probably flushes below that, and maybe the 120s is a better spot for that thing to bounce. But I think NVOS had good news in relation to LA Fitness. Let me go to Seeking Alpha and pull it up. NSPR has got some insider buying up in the 3s, so it's below that now. So insiders are down a decent amount, but nothing. They're down like probably 20%, 25% maybe on their shares. Let's see. That's the NSPR. I want to go to NVOS. No news out of NSPR in a while, so I think we're probably gonna get something soon. They, every couple of months, these companies will probably, where they like to at least update or drop something to, get some interest back, especially when they've been selling off. Here it is. They announced signing of a master facility license agreement with LA Fitness in Canada. This is kind of something that we've already known. The thing with this company is that they kind of came on. They uplisted to the Nasdaq, I believe. Let me look at this. Uplisted to the Nasdaq. Yes. They uplisted to the Nasdaq this past year. I think in February. I think it was February. And I've kind of just been downtrending since. It's a low float. It's a 10 million float. Insiders own about 64%, which is a good sign. The market cap is 38 million. They've made some acquisitions, I believe, to what the companies are they acquired a bunch of pharmacies. They acquired pharmacies that are going to be doing revenue more than their market cap, and that's just a part of their business model and stuff. So they have a lot of other avenues, or at least I guess vectors to that. So I mean, for me, it's one that eventually will get picked up, and it will go. I mean, I'm literally just being patient on these things. I don't care, like, if I'm down 5, 10, 15, 20, 30% on some of these things, but when they have potential to go 100 to 200% type of crazy moves, then I don't really care. That's how I'm planning on playing it. I built out a new strategy, which I'll probably make a video on at some point, for my small cap swings to handle times like this. And it's been a good time, or at least a great time of lessons to kind of learn how to handle this better. And a strategy that I used to kind of use, but I kind of fell away from it a little bit to some degree the past year, because it didn't work. It didn't capitalize very well, because when things would just run, I would be in, but I would be in with such a small size, my initial starter size. And the problem was that when stuff would run from there, 20, 30, 40, 50, 100% from that level, great, I'm scaling out along the way, but I'm not in that heavy. So I'm making some money, but it's not like I'm making a lot, right? And I wasn't very heavily positioned there. So that hurt. But then I started to adapt, and I was like, okay, well then now on dips, I'll nibble in and I'll add more. The problem with nibbling on dips in longer downtrends or bear markets for small caps is exactly what you see. You run out of money way too fast. So now I kind of have a new strategy where it's 5 small caps swings at once is the max. I'm not going to hold more than 5. I have no problem holding some longer term positions, for example, like airlines like I've got right now. I got no problem holding Penn. I have as a out to 2023. I think Penn will do very well with earnings the next couple of months or the next couple of quarters. So I'm expecting some good numbers there. I think it's going to be much better than DraftKings. And it's been, again, Penn's been getting hit with the tech stuff. So I have 50 calls out to 2023. So I'm not really too worried about that. But those are kind of longer term holds that I'll play. But inside of small cap land, I have no problem holding a small cap for months and potentially 6+ months. I have no problem with that. Obviously, I'm trading around it. So if it spikes a little bit, it's up 20% one day, you can bet I'm taking something off, right? And then I'll look to re-add if it goes lower. But I'm playing it for the bigger move until it fundamentally either we get what I'm expecting or what I want out of it, whether it's data release, it's this news, it's certain news, it's earnings report, or it's this, because, for example, NVOS, I'm holding for the next couple of earnings. At least the next earnings, I think that's where it may get found. But again, if the next earnings comes out and the market's still this trashy for small caps, it's not going to move. Doesn't matter how good the earnings is. Maybe it will if it gets found, but it's probably not going to move. So once things kind of heat back up and people start trading these things, I don't want to say normal, but back to kind of how it was pre-pandemic, not even saying pre-pandemic, and value matters and stock picking matters because you're looking for individual companies and you're not looking for, and playing the overall indices is not as profitable, then I think that's going to be a great play. Those will be some great plays going forward. So I have those. NSPR is another one of them. That's one of my heavier positions. Nope. I mean, I'm fine with just chilling on where it's at right now. Where is it at right now? Let's see. And then VISL is one that I've been starting to add heavier. I think it's going to go under $1. NSPR insiders bought up in the 3s. Let's go find that. Let's see. They were buying this thing last year in the 60s. They did a reverse split, so it adjusted that. I think those are still down from where they are. But we saw some more buying in November and even December in the 3s, the mid 3s, and then even the low 3s. We had the director buying, and they bought decent sized positions. So it wasn't like they were just kind of nibbling. They bought some decent sizes, and so that's interesting too. Another one of my favorites, which I just don't have right now, but I love it. And if it goes without me one day and I'm not in, it's fine. ELYS. The CEO took his entire salary and bonus in stock, which is that's a pretty impressive thing to do, or you got to have some conviction there. A 58 million market cap. They're growing. They're expanding in the U.S. now. They were really They really kind of at least solidified themselves in Italy, and now they're expanding in the U.S. in terms of sports betting, which I think is a massive market, and which it is. It really is. 27% insider owned, so the insiders do own a good bit of that, which is good. Over 25% is, I would say, pretty notable. Like that's okay. It's a good amount. The more the better there, but that's a pretty good amount. And then it's a low float stock. It spiked before in one day. It went from 450 to 660, so it has that potential. If I go down, you also see some insider buys across the board really the past couple of months. So another one that I like as well. It just, again, beat with the market. The company earnings reports have looked pretty good, but the market's been killing it. And if you look at another one that I think is insane is VISL. Now, hey, it had a spike in October, so was kind of a relief bounce or relief pop. And I think we're probably going to get one of those again soon, and I would be looking to sell into that. But this thing too, if you go back and just simply look at their earnings reports and look at their numbers, and now their price of sales is at 1.63, which you don't really see, to be honest, in a penny stock. That's pretty impressive to see it coming down that low in a penny stock. Usually these price of sales numbers are like wildly out of range, and it's like insane, but this is getting pretty ridiculously low. But this thing, like if you go look at their earnings, like the company's been moving in the right direction. Like the numbers have been getting better. The last earnings report was actually really nice, in my opinion. But the stock doesn't matter. It's the market. So that's what we've been seeing really across the board there. So it's been challenging, at least interesting, whatever you want to call it, to say the least, right? In small cap land, but that's why at least I have built out a new strategy going forward for this year, and we'll see how that plays out compared to last year. Mesa was that airline play we're looking at, not Mesa, MESA. This is one of the airline plays we're looking at, a small cap airline play, but it's essentially tied to American, I think, and United. It's like essentially like the smaller jets that they use for like shorter term flights. This thing went from February to March, mid-March of last year. I'll be talking about this again. Last stream, 650 to 1740. And I'm not expecting 17, but if we get a move to 10, which I think is much more reasonable, I like it a lot. I saw some pretty interesting or some big buying on Delta Airlines, some call buying. This is cracked down today, hit the 50 SMA with the market. Dow was down a good bit, so it's kind of cracked down today, but had a really strong day yesterday, beat earnings, and had updated guidance and whatnot for the future for summer and spring travel. So a lot of the airlines did quite well off of Delta's earnings, but we got a bunch of earnings coming out in the next week or so, maybe 2 weeks across a lot of the airline plays. So I'll be kind of staying tuned to that, but honestly, across the board, there's nothing that should really surprise me unless it's like super, super bad. Nothing really will surprise me on those. I kind of just letting them do their thing at this point. Let's see. We're like right at that level on SPY. We'll see if if it's going to break through or if it's going to get cracked down to the downside. If it does get cracked down, we'll see if it accelerates down or if it kind of holds or it slowly kind of trickles off and whatever. But at least that is what I want to watch until close. Thoughts on Relly? This is like super highly shorted stock, right? Relly's up a good bit, 10% today. I personally don't know if I like it too much because it's up so much. I definitely don't like it because it's up so much, but it's one of those that's been like recycled. It's being kind of recycled left and right. And so the more it kind of gets recycled, the more this thing kind of stays up. And I don't know, it looks like up around $9 will be a key area. If it can get over 9, great. Here's our trend that we broke the trend to the downside. Now we're kind of building back up. This reminds me of PTPI. Let's see how PTPI is doing. PTPI. Yeah, this is falling off now. PTPI is probably done because it's cracking the 50 SMA. If it can't hold 250, it's done. So that's a good idea for a short next week. You'll probably get multiple opportunities of that too. This probably won't be like a one down day. You can probably let this thing kind of crack down below 250 and then short it on pops. And that's probably a pretty good strat, I would say, on PTPI. Grabbed a Mesa call for July. We'll see. I have a few. I actually bought one more today. Let's go see what I have. I have 4 of them now at 133 average is what I got. So that's like $500, I think, roughly. So I'm kind of fine with that, to be honest with you. Like, I'm not going to probably move. I'm probably just going to leave what I got on that front unless I really have some more cash or I really kind of tie it up. I like this play a lot. I really do. So we'll see how it plays out. But I mean, I'm kind of playing this one as like I'm putting 500 in, and the intention, obviously, right? If it doesn't happen, I don't see this going under 5 because I have $5 calls, so I don't see this expiring worthless. It's possible, but I don't see that happening. So it's kind of one of those where like either it's going to expire and I'll take this off at the expiration date for whatever it's worth, and maybe if I make money, if it's a break even or I lose a little bit, whatever. But I'm really looking for this thing to go to, I'm not going to sell these calls for less than 100% is the intention behind the trade. So it's kind of one of those where, I'm not putting in a full position size, not going to put in, whatever, but I put $500 in and it's like, I'm going to make at least 500 on the trade is the intention. It could be more, but if this thing goes to 10, yeah, then for sure. But that's it. That's the idea. Oh, look at that. Wow. That's actually pretty impressive. Rejection there on SPY. Kind of see how it's just like so funny to see too. And I'm not trying to fight it, which is why I kind of have my hedges set on some of the IWMs, which I think could get hit pretty hard, and the QQQs. But like these kind of like grinds up, and then just like it's just like one candle away from just getting destroyed. We've seen yesterday was pretty insane. Like look at some of these candles yesterday. This is nuts. Like you kind of had a little bounce and then it kind of consolidates for a while and doesn't really do much. And then you go from like 471 within less than like 20 or within a half hour, you're down to like 467.20. Like you're down like $4 on SPY. And it's like, wait, what just happened? And like literally what you went to go eat lunch and it's down 1%, which is insane. So the downside draws can be pretty nasty. And they can be quick. So I'm really interested to see how the close goes going into the long weekend. I wouldn't be surprised if it's nasty or we go to new lows. So we will be watching and we're going to see. BSQR, we both 5-minute chart. Mine doesn't show the split from yesterday. Let's take a look at that. BSQR. I haven't followed this one, but I don't know. It's sitting right here at 161.5. At least that's what I'm seeing. There's a daily chart on it, but the 5-minute chart is just sitting still. Let's take a look at, I'm going to go to FinViz. BSQR. No, it's still, I don't know. I'm not sure what's going on here, but it at least hasn't split on my end. At least from what I can see, it hasn't split. Trading resolutions. I definitely want to day trade more. Yesterday was I'll talk about it probably next week, or at least I'll talk about it in tomorrow's video. But yesterday was probably the biggest day I have had in a long time on just pure day trades. I mostly swing. For those who don't know, I mostly just like to swing and hold stuff long and look for undervalued plays and look for the mismatch and find the company's improving, the company's moving up while the stock's going down. What's going on here? Find that mismatch and try to capitalize on it. But definitely adapting to the volatility we've had is insane. So I had SPY puts yesterday. I had AMAT puts, AMAT. I'll pull this one up too. I'm actually curious where it's at now. AMAT is it's up. Look at that, really strong day today on AMAT. But actually, this could be a spot for a possible put zone. I kind of like that. But I had puts on this, and because last time it gapped up, I was looking at this saying, hey, if it holds 160 in the morning and goes and breaks out for new highs, that's a good long idea. But I woke up and it was already at 165. I'm like, well, I don't like that long now. And I looked back to prior days where all of a sudden the thing opened up pretty close to or at all-time highs, or opened up at all-time highs after a gap up overnight, and it sold off every time. So I'm like, okay, well, I'll take some puts versus, like, I let the first couple candles go versus the high of the day, and I entered the puts, and I got close to getting stopped out on this candle right here, but it didn't. It got rejected at the high of the day, and I'm like, okay, I'll stay in. And I took those puts, and I ended up selling into this draw. I didn't sell off the bottom, but I sold into this drawdown on this initial drawdown. And it would have been an amazing reshort at the VWAP, but then at that point, the market really tanked. So then the market really pulled it down there. Interesting though that the market's down today and it's holding up really, really well. So that's strength there in a weaker market. It's showing some strength. We'll see. Let's see. Dow is down. It's trying to rebound off the bottoms here. Nasdaq. Trying to bounce. Look at QQQ. QQQ, I really thought for a second today, to be honest, I thought we were going to see a possible 370 touch again. It looked that way in the morning, but then I was kind of expecting maybe a flush at the open to hit it. But no, the market open and just kind of bounced straight back up. So the question is it a trap? We'll see. All right, let's see. Go back to the 5 minute. We're at the 5 minute now. Honestly, what's really been a surprising stock is this. It's Vect. I've kind of like gotten to the point where like I almost want to just get rid of it because it's not doing anything. But I know the second I do that, it's going to go. It has been holding up so well the past like couple of weeks. Insane. It had this really interesting kind of grind where it was up for like 10 days straight. It was up every day, which you don't really see, to be honest, too often. And it's been holding up. And I scaled like half of it out, but I'm kind of looking for a bigger move here at this point, the way it's holding up. So I'm really interested to see how that plays out. We'll see, but it's pretty interesting but it's been doing it, but it just like there's like no volume. It just hasn't done anything. So I don't know. Maybe one day it's gonna just dump, or maybe one day we get news and it rips. I don't know. I'm just kind of waiting on it though. It's been weird. Oh, look at that! Look at these candles on SPY. That is pretty insane. One dump, and then it just right back to that same exact level. That's gonna be key. This 462.50 is key on SPY. So we'll see if it kind of gets stuck here. If not, then maybe this thing goes for a potential new high of the day into the close. That would be insane too. I mean, like, again, would I expect nothing less at this point? Hope it flushes at the end of the day. We'll see. I think unfortunately, from now on, as I'm getting just feeling throughout the day and kind of seeing how things are playing, it seems like a lot of people are on that same thought process. If you go put call ratio past 5 days, it's up a good bit. Not at like crazy high levels, but it's up there relative to where it was earlier this week. So it's possible that we maybe are gonna get some people who are short squeezed out here, and then maybe this weekend is the opportunity for the dump. We'll see. I'm probably going to hold my hedges to the downside just in case we get that over the weekend dump. I would just like to have them. So yeah, now we're kind of grinding back up on the S&P now. So maybe we go for a high of the day here to the end of the day. I don't know. But yeah, I have IWM puts and I have QQQ puts. Kind of like roughly at the money. So worst case scenario is that nothing happens over the weekend and I just take them off and I lose like 50%, which is fine because it's they weren't like massive positions. So that's kind of how I'm going to play it. IIPR. Let's take a look at that one. IIPR. It's a REIT play. Wow, it sounded like a good bit too. I mean, let's look at this thing. It had a really great. I mean, that chart's insane. But yeah, I mean, if this thing is, I don't know the fundamentals here, but if it's been solid and it's been growing pretty nice, then this should be one. This could be one that you would want to add to the long-term portfolio on these dumps, right? On these flushes. All right, Nasdaq went green. Look at that. Surprising, surprise. Nasdaq went green. Next area, I guess, on SPY is kind of like this 463, like 30-ish area. I mean, you can see we had a bunch of wicks up to that level that we pretty much got rejected at ever since, failing through here in the morning hours. So if we can't get back above that level, that's going to be, that's our next area to watch, our resistance. And we're kind of getting up there now, and we'll see if we can break through. We shall see. But it's funny though. I think a lot of people are at least for my thought process is that usually in the past, what I would do is if like I had a hedge play, kind of like I have now, just over the weekend, because I kind of feel like we got some pressure to the downside right now, and it would be, it could be an opportune time over the long weekend to freak people out and get some crazy reactions going into the weekend, or to start the week off next week. So I would probably do the hedge isn't working, I'm out, right? And you get yourself beat up. The intention behind the play was a hedge. So if the hedge doesn't work, right, the hedge should not be an amount that if you lose it all is going to completely derail your portfolio, right? What's the point of that? But if the market goes higher and rips higher, then your holdings hopefully hold up or do better, and the hedge isn't going to hurt you that much if it doesn't go that way. And if the market goes lower, the way I see the hedge is great because now that I use the hedge to make more money on the back, to make money on the downside, well, maybe the portfolio is going down, right? Because I have a lot more weight to longer term holdings. Maybe the portfolio goes down, but it doesn't go down as much, and then I can take the money I made on the hedge and then roll it into some longer term stuff that I like, at those levels. So that's kind of how I see that. But I would, in the past, I feel like I would always chop myself up too much, where like I get the hedge and then it goes the other way. I exit it for a small loss. I'm like, okay, well, I minimize my loss there. And then I wake up the next day or like 2 days later, the hedge would have worked out nice. And I just didn't give it the time of day. So that's one of my, I guess, downfalls. At least it has been in the past. All right, let's go back. I'm curious to see how some of these runners are holding up. GFAI is a low float, 36 million market cap. Float is like 6 million. Pretty low float. SBEV kind of holding up all day. The longer this thing holds up all day, this could be setting up for a little squeeze out to the end of the day. I would kind of watch that. This is actually not a bad risk reward right here. You want to buy it towards the bottom of this range, which is roughly like, if you can get it under 270, it would be great on SBEV. Some bidders, 270, 267, there's some bidders there. But that probably pops up, and you can probably get a move to VWAP, which is about 7%, which is pretty good. So I would say up towards like that $2.90 to $3 could be a good area to sell into. Maybe it squeezes out for more into the end of the day, but this could be one that has that little squeeze out into the end of the day. Maybe I'll take a position there. Maybe. Let's see the next one. MYNZ. It's kind of pushing up now. 25%. Pixie has been grinding. Now it kind of cracked the trend. Now it's failing off to the downside. BBIG. Where is BBIG? Smile Direct Club's up a lot. It's actually an interesting one too. BBIG. Under 4 now. I'm surprised though. I'm surprised it's had 3 days of kind of continuation moves, or how it's holding up this well. I really am. I thought BBIG for sure would kind of have a pop and fail, and maybe it still does. It kind of filled this gap right here, but I don't know. I don't necessarily trust this thing. There's a lot of bag holders in this thing, I think. So I don't know. It was good. It was a good buy back in this range. Literally, like, this history repeats itself back in that range right there. Prior runner. There you go. Okay, I was going to look at. Let's see. Smile Direct Club was up today. It's off of new lows essentially yesterday, and it's up 11% today. I think I saw some article maybe come out on them, and it was something along the lines of like, penny stock for a short squeeze. These penny stocks are set up for a short squeeze or whatever. Maybe, I don't know. All right, there's SPY. Here's SPY. So it got rejected now. It couldn't break up and get over this area right in here. This 463 to 463, 30 or 40. Can't get there. Now, if it holds the 462.50, then that's still good strength. If it holds this level, we'll see. Also, days like this, though, it seems like, at least in my experience, or not even that, just usually there's types of days where you get a crazy volatile week. It could be one of those days where premiums are just meant to bleed out. So like it just chops it around. And we kind of got that. If we go back the past couple of days, we kind of got that like back in here on, what was that, Wednesday? Like we had some pretty big moves off the bottoms, like Monday, dump and then rip, and then dump and then rip on Tuesday. And then Wednesday, it just kind of chopped around, let the premiums kind of bleed out. Everyone's like, oh my gosh, like this market's so volatile. These premiums are so expensive because, you got to price in the potential for, bounce or dips or whatever. And then what happened? Essentially, we just, bled out. We're bleeding out, that day. Then a big move the next day, and then today I would expect potentially a bleed out. But it's also setting up too, if this is looking at the 30-minute chart, let's look at the 1-hour chart. Yeah, I mean, this is interesting too. If this would be a spot. This could be a spot for a bounce. But if not, we kind of held roughly kind of that 460. We dipped a little bit lower on Monday, but we kind of had that consolidation on Monday was 456 to 460. And then once we got over 460, it was kind of, okay, bull side, and we ripped up, $6 to finish the day. That 460 is kind of an interesting sentiment shift point. Under 460, it seems like the sentiment will shift bearish. But as long as we hold that 460, it seems, like buyers are at least holding on for now. So that's at least the level that I have been noticing on that. What else do we got? XBI is, let's see where that thing is going to be, I think, a massive bouncer at some point. Here we go. What's it doing? 98. Nice. Look at that. Really nice recovery today off of the lows. It went green. Very interesting on our XBI idea. PL, Planet Labs. We got, I'm looking on the top gainers. Hour. This is an interesting one. Hour is up a good bit. This is a stock that was a little pumper. I think they pumped that. It was a recent IPO. That's what it was. Recent IPO, popped to 10. Now it fell to sub 5, and now it's at 6. Okay. I'm going to do more with Bowtie Nation. Yeah, actually, I have a video. We should have a video by the end of the month. I think our plan is kind of once a month. And so I'm going to probably be talking about spotting trend shifts and spotting and using some indicators to spot those trend shifts. And we'll talk about a bunch of different things. And I think and we'll talk a little bit about too, the bear market, right, of 2021 and 2022, even though we haven't been in a bear market for the indices, I think I want to peel back that layer and dive into how we actually have for a lot of stocks, but and how you can spot that reversal on those stocks and what are some indicators we can look at to spot those reversals. So that's the plan for the next video. This month, in the coming weeks, probably by the end. I think I'm going to film that relatively soon. And then that should be out within the next 2 weeks or so. Joseph's great. I mean, I think it's a good, little mixed cloud we kind of have going on. So it's fun. All right, let's see. Any news that I'm curious if there's any other news. Let's see. Let me pull up this. Dow falls 300 points. JP Morgan slides 6%. Yep. I mean, that's what we kind of had this morning. Here are JP Morgan's new favorite stocks for January. Interesting. The country is getting angry. Sees inflation sinking in Democrats in midterms. Yeah, I'm actually kind of curious. I mean, I'm not that we're going to get into politics here, but I'm curious people's thoughts on that too. I mean, I guess midterm elections coming up this year, right? So I wonder what people are going to think. And I mean, we're going to find out, right? And voting wise, but it's going to be interesting. I'm curious too, because again, I think we kind of had that impression that, hey, Democrats are bad for the stock market. I mean, obviously, right? There's different policies and a lot of stuff, growth and small cap wise, things have been different than the overall markets. But if you look at the overall markets, they're up obviously a good bit. So they'll probably, we'll see how that plays out. If, let's say, a lot of Republicans win those midterms, then, what's the market react to that? It'd be fun to pay attention to that. I think there should be some reactions. I mean, why not at this point? Why not? Obviously, I think the presidential reactions will be a little more strong. But then again, at the end of the day, like all these midterms, a lot of the people who are going to be essentially able to get things done, bills passed and enact new policies and whatnot, that's all like the midterms and stuff. So, that's a lot of under the surface people that need to kind of position themselves in Congress, to do stuff. And so that's important, I guess, right? So we'll see if that has an effect on things. Bill Ford is doubling down on Ford shares and quietly amassing more control of the company. I mean, that's interesting how it's been up, right? You would think that maybe it's better risk reward if it's down. Ford's up today. Look at this. Ford has been just a beast. I mean, eventually Ford is going to have that huge SPAC side. I think it's going to be the same exact thing as mRNA. Now, I think it's, potentially positioned themselves a little bit better than, some stocks like mRNA. I don't think was fundamentally there to kind of base this move. Ford might have a little bit more of that, I would think. But again, look at this. mRNA, a massive just destruction. I mean, I can get rid of some of these lines because these are kind of void. We've already played them out. But this thing went to like almost $500, and then now look at it, it's $200. I mean, this thing got destroyed off those highs. Just got destroyed. I kind of looked back and saying every pop, I kind of like the short. And this week we had one on Monday too, or last week, I forget what day it was. It was Monday, where it popped to, 243. That would have been a really good, amazing short on those. But I didn't take them. But it is what it is. But this thing has gotten destroyed on that move. I think you're gonna get something like that. I think that's kind of the progression of a lot of these, stocks that make crazy runs, is that you have these crazy runs and they last longer than you think. If you start thinking about shorting Ford, you may have to endure the next couple of months of this thing kind of holding up. And then all of a sudden, Ford hits like $30 or it hits $40 or hits, I don't know, $50, who knows? And then the backside comes and now Ford's at $20 or Ford's at 25, 3-4 months later. And, the short from 50 to 45 or from, 30 or 40 or whatever to 25 would be great. But maybe you just got in a little too early and you kind of screwed yourself. So that's going to be what happens there. We'll see. How long did it take me to monetize the first channel? It honestly took a long time. What did I have? I was kind of doing a lot of different mix of videos. I was doing all different sorts of stuff back in college before I really kind of found what I like to talk more about. 2019 was, I guess I made that. I think you probably can go back to 2019 and see that pretty clearly, I would imagine, in videos or whatnot on the channel. Because I don't think I took much, if anything, down. Maybe I took some stuff that was like, I look back and was like, that's a stupid video. I shouldn't even have posted that. Maybe I took those types of videos down, but like pretty much I left everything up. So like it took me honestly a long time, and then it got monetized in 2020 January. But if you go back to when I started making videos, it was probably a long time before that happened. So everyone's different, right? I guess everyone has a different algorithms are just insane. Like the way that the algorithm works. I still believe that I did something, or I feel like I'm just somehow shadow banned or something in the algorithm, because I'm like, certain things that I'm not expecting anything, but certain things just don't make any sense. When I look at other channels and I see the content and the type of stuff people are talking about and the quality and whatnot, and essentially the base behind it, and then I look at like what I'm doing, like, is that make any sense? Don't get me wrong. There's a lot of people who are way better in terms of what they do than I, at least in terms of quality and whatever and content and stuff, and who have great channels and have a lot more, growth and whatever behind it. But there's a lot of people who I don't think do, but algorithm likes them for whatever reason. So, you can't, I've come to terms with the algorithm. It is what it is. And you always trying to figure out what kind of works. But I've also come to terms with, like, I'm not going to just make videos for the algorithm. The algorithm was pumping top stocks to buy every day for the past year. Now it's not anymore, because it's just that stuff no one cares, first off. But it was pumping that stuff for really this time last year was insane. But I just really didn't like doing those videos. I just didn't like doing them because, first off, I don't want to tell anyone to buy something. And second off, right, it's not helpful, because if you're going off of a video, number one, a lot of these stocks were inflated already as it is. But if you start going off somebody else, then you're going to rely on somebody else, which is ultimately not good. You want to have your own process, your own plans, your own thinking behind a play, behind a trade or an investment, because that's the longevity, right? You're not going to be, 50, 60, 70, whatever years old, and you're going to be looking to someone to tell you what to do. No, you're probably not going to do that. Maybe some people do, but I mean, the reality is most people don't want that anyway. And that's not how you're going to make it, or at least, distinguish yourself in terms of returns or whatever. Because if you're just following the crowd, then whatever the crowd does and whatever happens in the crowd is what you're going to see. So you don't want to follow the crowd all the time. Maybe for GameStop and AMC last year, you wanted to follow the crowd, but I don't think you want to do that long term. To monetize, the best way to go about it is searchable stuff. So the way that I see monetizing that type of stuff is obviously you have to have good or content. You can't just the problem is that a lot of people try to copy. I personally, I don't know. Obviously I'm in tune to what people post and stuff, but I don't watch really very many videos at all. So I kind of just do what I want to do and what I think is important. I talk about what I want to talk about. If I'm just noticing stuff and trends, or I'm noticing a shift, or I'm noticing this, or I'm noticing that. I pretty much just play it that way, which is good and bad. There's obviously trends that I probably could capitalize on that I don't by going that route. But the problem that I think a lot of people see is that they try to be like, oh, I got to make a viral video. It's got to be this, it's got to be that. But the reality in terms of monetizing for me was I just stacked videos. I stacked, videos on topics that not many people were making videos on. I was like, well, why aren't there videos on this? This is something that could help someone. And I stacked it up, and over time, those videos just slowly kind of, got a few views here and there, and nothing crazy. But over time, right, it was kind of, I don't want to say the low-hanging fruit in a sense, but it was stuff that there wasn't that much, I guess, competition in terms of searchable videos for, if you want to call it that. And so that's how I did it personally. I find that to be the best way to do it initially. Everyone's in the algorithm is different though. Rather help teach people how to fish. Exactly. That's kind of how I see it too. I mean, I enjoy like talking about my stuff, and it's fun, and people can hopefully, learn from my mistakes and see, ideas that I have and ultimately make their own plays off of that. That's why I kind of like the Saturday videos, because we talk about the entire portfolio and all that stuff. Those are fun, but people can see the progression of that and where at least my thought process is. But ultimately, people need to make their own decisions, because I'm developing, or at least now this year, and now as things have changed, or at least market wise, and of course it'll change back in a couple months, and that my next strategy maybe won't work as much, and you're always got to be adapting. So one of my biggest things I want to do is learn to be quicker at adapting to stuff, which the markets I feel like haven't been this fast paced in a long time. The pandemic changed that for sure. It was fast-paced upside, fast-paced downside. There's a lot of volatility. There's a lot of more action. There's a lot of opportunity. There's always stuff happening, it seems like. Instead of like back when I originally got started, it was a lot slower, if that makes sense. Like it was like, okay, like these types of moves on the S&P that we would see the past week would take 3 weeks, a month to happen. So like this craziness that we saw from all-time highs down to 456, back up to 473, back down to 460 today, that would probably take the course of a month and not 2 weeks. It's just kind of how it feels. I don't know. And so that's why I think small caps were an interesting way to play the quiet periods, play the downside, because when the market wasn't going up, or it was really quiet, or it was like just, chopping along, or very, low volatility, kind of like this period from here into November, right? The 11th through like the 20th or 4th. Look at these candles. These candles are pretty small. There's not as much range, right? Then after that, some big range, up, down, left, right, and it's all over the place. But I think small caps were that place that brought you more volatility and was a little more appealing to make more money. Go out and make more money in small caps. And now it's just a different landscape. People are playing options. You're playing large caps off these crazy dips. I mean, you're getting massive moves in just even Apple stock, which, intraday range is nuts. So like, and there's so much more liquidity there. So they're safer than playing the small caps that are low floats, that within, a one market buy or market sell could be, the difference between you making a ton or losing a ton, right? So why would I trade those when I can go trade the big names, and there's enough volatility there anyway? So that's kind of what we're dealing with these days. Adapt or die. Exactly. I got to do a better job of adapting, myself in these conditions and whatnot. So, that's at least one of my goals for this year, and we'll see how it plays out. But that's the other thing too, when it comes to like positions that I take. If someone's in a or just buys behind, after I say, okay, I like the stock, right? I'm buying it for this reason. If someone just does that, the problem that I have, or at least in small cap land, I'll kind of give a hint, or at least I'm going to go detailed into this, but I'll walk through. Let's just go through like an example, like UAVS. I don't have any, but I kind of like it, honestly. I think I was looking at this one yesterday. I'm like, I kind of like this chart. I mean, it's a terrible downtrending chart, but in the risk reward now, it's getting a lot better than where it was if I was buying this thing at 2 or 250 or 3. This is kind of the idea that, hey, like I can weather the storm. Obviously, I don't buy any small caps up. I don't buy them after big moves. I don't buy them after news. I don't do that. I want to buy them at the bottoms or after it's been quiet for a while. So I'm waiting. I'm trying to get a really good risk reward. But if, let's say, I'll even use this thing like right now. Let's just zoom into this thing like right now. What's it doing right now? Let's just say that the next 6 months, this stock drops to like $1, right? It drops another, 40%, whatever from here. And it drops to $1. Okay. But I don't know that, right? Going into it right now, I don't know that. and it doesn't make a run, and my target's $2 or the 50 SMA, which is roughly on 2, that's my first target. And what I'll do now is I will buy a chunk, a fifth of a position is how I'm going to play it. So a full position is 15% of the portfolio, the way I'm going to do things. So a fifth of that I will toss in, no matter whatever the portfolio value is at the time, I will toss in initially. And then I will identify areas to the stock and say to myself, okay, let's just say this thing is down a lot as it is. Let's just say it keeps going and goes to 1, worst case scenario. Maybe it goes even lower, who knows? And I'll explain what I kind of have in line in case it does. So let's say it drops another 30%, okay? Every 10% from here, I want to add. So if it drops another 10%, so okay, where's that? That's roughly going to be at like 128. At 128, I'm going to buy another fifth. And then at 10% from there, 10 more percent from that, I'm going to buy, let's say at like 115 or at 112, I'm going to buy another fifth. This way, now my average is like that 120, is at that 128 after 3 ads. I still have 2 more ads possible before a full position. And if it runs from here at some point, great. Great, I take profits in the run. But I'm going to kind of be more strategic in getting that average down on fundamentally undervalued plays that I believe that have a run in them. So I'm not going to do that on any stock. Obviously, I'm going to do my due diligence, which that's a video I made a couple months or a couple weeks back, maybe a little over, maybe about a month now, going over how to do due diligence. So I'm doing my due diligence. I now have like a matrix almost set up where I've created like, okay, we got the risk reward on this stock. We got the insider activity, buying, selling. What are they doing? Are they holding a lot of the company? Threat for an offering. So how much cash do they have? Do they have an S3 on file? Are they going to offer? Like, is there a chance of that? A lot of stuff, fundamentals, revenue growth, all that stuff. And then essentially like CEO and management. Is the CEO and the management, if I look into them, do I like them? Are they people that I think I can trust in terms of putting my money in their stock? So I'm doing all of that, pinning each stock that I have on my list against another, and then taking the 5 best at any given time. Maybe not all. Maybe I'm not going to be in 5 at a time, but like taking the 5 best or taking a couple of the best that I see, the best risk reward on. Okay, and then I'm going to apply this strategy, and this strategy should be really nice because that when we get those runs, and sometimes these stocks will run 100%, 50%, 200%, who knows? Then you can make a lot of money on that, but you have to be positioned properly for that. If you're not positioned properly and you're just kind of buying, nibbling on the way down, which is one of the problems that I've had in this market, then yeah, you're going to get killed. And the problem was that worked a year ago because nothing would dip this much. Nothing would go on these prolonged downtrends. Everything would kind of just grind higher. So any dips you want to buy those pullbacks, you want to buy those dips. But now you don't want to do it that way. You can still play the small caps. And if you find some undervalued stuff, if you have patience and you hold for 6 months, you're probably going to come out on top at some point. You're probably going to get a spike, you're going to get a relief bounce, or you're going to get a PR, or at some point they're going to run the stock. They almost, all of them almost go at some point, right? If you have patience. So that's kind of the idea behind that. So that worst case scenario, my strategy in terms of averaging would never put me down more than like 15% on a position, which is fine to me. That's fine. I'll never be down more than 15% on a position. And if that's the case, then I'm always in range of a quick 20, 30% day or a PR day that this thing pops 25, 30%, I'm green. Boom. So worst case scenario, I'll be able to take it out for a profit. The way I'll sell those on the downside is if something fundamentally changes. So if all of a sudden I'm in UAVS, I like it. The revenue is growing. Let's just say, for example, I'm not sure. I haven't looked into it enough. Insiders are buying. Let's say all of a sudden the CEO just dumps his entire position. Or all of a sudden they come out with their next earnings and it's terrible. Like it's a complete 180. They now just fell apart. They got no cash. Like if something like that, then I'm okay. Well, now the risk reward here makes no sense. It could go way, way lower. So I don't want to hold that whole way. I'll just cut it and take my loss wherever it is. That's kind of how I'll play that. And that's at least part of the strategy going forward. So hopefully that means a long-winded kind of, I guess, way to look at it or think about it. But that's where my head's at for this year. So let's see. Netflix. What's going on here? What is Netflix up to? What the heck? Straight up. Netflix raised, standard plan raised 15.49 from United States. Price increase $1 to $2 per month depending upon plan. Price for standard plan to Canada raised. They raised their prices. Like $1 between I think $1.50. The standard plan is now $15.49, up from $13.99. So the stock's up. Got to take whatever the markets give you. Exactly. That's the thing. That other thing too. People get all upset about their portfolio in the short term and stuff. You also got to look at it as like, you're here, you're learning like what's going on. You're getting a lot of experience for the future. So there's a lot of stuff that you see every day through these, ups and downs that you can take and apply to your next position or your next, year or your next whatever. And it's going to help you a lot, I think. Thoughts on Hood? Kathy has been, yeah, she has. Kathy has an average between 32 and 34. That's insane. I like Hood to be down here. I didn't like it, to be honest, like that much, but I like it down here. So honestly, anything under 15, in my opinion, is a solid opportunity. If you're going to play options, give yourself some time. But anything under $15, I think, is a really good opportunity. But if we get a day, I think it's going to happen very, relatively soon. If we get a day where Robinhood pops 10, 20%, let's say 20%, and it goes to, the upper 17, 18, even $20, I would be taking profits on that pop and then look to buy that kind of calm back down period. Okay. In a sense, that's how I would look to play it. But I do honestly like the spot it's at now. You're going to have to see how this plays out. The problem that people have with Robinhood is the CEO. And I was kind of talking about that before too. When it comes to like building out my small cap positions, the CEO is a big part of driving the company. And if you don't like the CEO, which I think a lot of people may not like the CEO of Robinhood, they kind of see him a little sketch. He seems, this, maybe that's not how you feel. I don't know. If that's the downside, I guess, of Robinhood, but there's always more downside, but that's one of the downside draws, I would imagine. So, let's see, GILT. Let's take a look at it. Broaden it out. Yeah, I mean, it's kind of trying to bottom here. Satellite company, tech play, satellite broadband communications. Interesting. It's actually, kind of holding the 50 SMA for now. So it's trying to play that, but yeah, I think that strategy is really a solid strategy in terms of adding on those small caps. I don't want to make it seem like they all go and they're all going to eventually kind of run and they all go up at some point, because they don't have to. But in my experience, at some point, they get a relief balance, especially if the companies are actually decent companies. If it's like a scam, then yeah, different story. But at some point, these things get these relief balances. So look, here we go on SPY, by the way. It's pushing up. It's right at that level. That's been resistance here. It looks like it wants to try to push through now. It wants to try to push through. We'll see. It's going to be kind of wild on the plays that I have, because I pretty much hedge myself for the weekend into next week. So if we do see crazy downside, I'm there. I'm fine. But some of these options are going to go wild. Now, I guess that they'll have value, so I'll be able to kind of get out if things don't do anything come Monday. Tuesday and then Wednesday. But if we do see, we could wake up on, Tuesday morning and all of a sudden futures are huge down and everything's down big. So that's kind of where I'm hedging myself. All right, let's see. Do you use Bollinger? I don't use Bollinger Bands. They can respect the range and middle average line. Yeah, some people love them. I personally don't. I just like looking at support resistance and stuff like that, and my SMAs, and then VWAP on the on the short term charts. That's really all I like to look at. But everyone's different in terms of what they like to use. If that works for you, if you want to use Bollinger Bands, then that's fine. Personally, not a huge. I don't like cluttering my stuff as much. CHPT, I like this one. Honestly, I think we looked at this one compared to Blink. I like it compared to Blink, relatively speaking. And I also have seen more of these around just in general where I live, which, it's kind of good, at least kind of cool. Like, hey, I can actually kind of see the company instead of like, I don't, maybe I can't see the company. I don't know what they, I really, what they do. You can read all about them. You can see the stock and stuff, but like, seeing it on the streets, seeing it in my garage, literally charge point chargers. I mean, it's pretty cool. I think under $15 is probably is probably a good play for the longer term, but you got to obviously have time on these. You're going to have your ups and downs, but I think I know it's not going anywhere unless the company goes under, but I don't think it's going to, and I don't see this thing, being under $15 forever is how I kind of play it. We looked at let's take a look at this. We looked at their numbers, and the things that are kind of a little crazy is like the price of sales. And then we looked at Blink's price of sales, and Blink's was even higher, which is not good valuation wise. But this with CHPT, the numbers are a little more reasonable. And then I would want to look back through their earnings and see how they're growing. But they're going to have to grow into their valuation in a sense, whereas like Blink really has got to grow into it. So that's kind of how these companies are setting up this year. And a lot of people, at least for right now, are like, I'm not going to mess with that. I'd rather not, wait around for these stocks to grow into their valuations. I'll come back and buy it lower. This is kind of how people see it. So that's been what we've been looking at. Have you ever tried reaching out to schools, colleges? I haven't, to be honest. I have not. Yeah, I guess that's a cool idea. I mean, it is a cool thing to do. I wouldn't be opposed to it. I really wouldn't be. It's funny, I guess kind of on a different topic, but I got an email the other day about, it's funny, like I'm getting a lot of, I get them all the time, like people who like are like, yeah, I want to sponsor, like we're looking for a sponsorship deal, sponsor the channel. And a lot of that's just like, sometimes you see some like random crypto companies and coins, and they want you to pump a coin, which is kind of hilarious that stuff even still exists these days. But I'm also, I get like some really random stuff, and people will email me about these things, and it's like, they say in the email, it's like, we love your content. We love this. It's really good. And this, that, and the other thing, we really think this would be a good fit for your audience. I'm like, do you understand that what you're promoting right now or pitching to me has absolutely nothing to do with my audience? It has nothing to do at all with anything that we talk about on a day-to-day basis. It was like Amazon FBA. I'm like, nothing against you guys, but like Amazon FBA, if you guys watch any videos over the past year, you would know I have never have talked about Amazon FBA. Never. So it's like some random stuff like that. It's just funny. Lots of puts. I mean, look at that. I'm just seeing on one of the groups I'm in, we see lots of puts coming through. These are expired. Are these expired? No, these are March. So a lot of times you see the big, let's take a look at the SPY. It's I think we're going to get some crazy, it's still putting in higher lows. It's holding VWAP for now. I think a crack under VWAP and maybe there's panic selling to the close, but it's held up better than I thought. I mean, it's down, which is kind of good, resetting, we don't want to, market doesn't have to be up every day. Doesn't need to be up every day. It's not healthy. But yeah, it's still holding up and just kind of grinding VWAP pretty nicely. Let's see, anything under 20 though. Let's see. Same thing. I mean, here's the thing on CHPT. Do I think under 20 is probably fine? Yeah, but if you're patient with 5 years, plus years, yeah, it's probably fine. Any stock at this point in time, you're looking at these stocks and saying to myself, I was even under 25. I don't think a stock's gonna be trading under 25 in 5 years. But like if you're looking at this next week or next month or next, or even a year from now, yeah, you're not giving yourself much time. These companies have to grow into these valuations. And unless you had a period of time where all of a sudden it's back to risk on and it's back to speculation and growth, if that doesn't happen for the next, who knows how long, it takes 6 months, maybe it's next week, maybe it's next year. I don't know. No one can time that, right? It's going to probably still stay. It's probably going to trend down, or it's going to stay under $20, even under 15 if we're still in that environment, right? But you can look at this company and say to yourself, okay, on this current growth trajectory right now, the valuation is not going to really make much sense to be down at this point in 5 years, right? They're growing at such a fast pace. Doesn't make any sense. That's how I look at that stuff. But everyone looked at this and says, well, if it didn't go up tomorrow, then I'm out. Like, or you buy calls for next month. It's like, well, that's just, I hate that approach unless you are in something that is trending or you're playing it and you understand that, hey, this thing could easily expire worthless. If stuff's been trending and you're in a hot market, then yeah, like I guess, I can see that playing the trend, playing the momentum, but NAKD changed symbol to CENN. It's up 20%. Really? Let's take a look. Did they really change their symbol? Oh, wow. Yeah, they did. Because I had a chart. This is my chart from NAKD. Yeah, they're down so much. They did a reverse stock split, and then they're getting annihilated. But they're up 20%, which is pretty interesting. But then they're like an EV company, though, right? I guess maybe a short squeeze. I don't know. Personally, I don't know if that's... I don't like some of those short squeeze plays because you're kind of just hoping and praying, I feel like. But this is formerly Naked Brand Group. Commercial electric vehicle. It just seems random. I would want to look more into that. But like, here's their site. Naked Brand Group. Like, they were like a clothing company, and now they're an EV company. Like, what is this? Like, it's really random, and it just seems like a pivot into a hot sector in a sense type of thing. So I don't know how much fundamental backing that really has personally. And market cap is 800 million. If that's accurate, I feel like they probably have no sales, right? I don't know. I would want to look into that, but if they have no sales, then this thing could easily go down way more in this environment. For a lot of these things, I really wouldn't be comfortable, to be honest, in some of these just random stuff, these random companies that are already up 20% off the bottoms. I wouldn't be comfortable playing any of them until we get a massive runner. Like, we need to have a 500%er or more in a 2 to 3 day span. If we get something that just kind of never dies and goes for a massive run for how many days, 2-3 days, short period of time, and out of nowhere, that is what sets off small caps, and we haven't had that in a long time. We kind of have these kind of grinders that kind of pop, fall off, and then repop again because it's just people recycling the same exact plays because there's nothing else to trade. They recycle the same ones that they've traded before because, hey, it's run before, and I'm going to recycle it out. So, it's just like, I hate it. I really just, I don't know. By the way, we were looking at this before, and I didn't take a position, but I was like, hey, I kind of like it down here, versus like this, 265. SBEV popped up, and it's over 3 now, so I would be selling into that pop. But that was a nice little bouncer. Again, why? It popped up hard, sold off, and it didn't die. These things, if this is gonna die, shorts want to take it down and do a full all-day fade type of thing. All-day fade is the type of move you're looking for, right? Well, guess what? You're through midday, and it's looking weak, and then it bounces, and it's come back down to that same level, and it looks weak again, and then it bounces. It held up. Someone bought this thing up. It held up all day. It's setting up for a secondary squeeze out, and then that secondary squeeze out is where I would like to take profits. Now, could it go for more? Sure, whatever, great. But the high probability trade there is off of that risk of the low of the day or risk of the bottom of the range into the top of the range. In this case, the top of the range lined up with VWAP, so I'd be selling some up into that VWAP, holding a little more for a bigger move, and then I'd sell some at 3, and then if I held any more, I'd maybe hold a few with a trailing stop loss and ride it up. That's it. But that's kind of how that played out pretty nice. I want to do more of that too, which I played. What was it? TSRI. No, it didn't work out that well. Oh, it's up today too. Interesting. But this is another one of those where if you look at the trend here on this thing, right? This thing had a pop and it should have failed and died and gone back to where it was. But it kind of hasn't been. Look at this. It's kind of building higher lows. A morning dip, and the morning dip gets bought up every time, and it kind of pushes up throughout the day. And so there's not much volume here, but at some point this is probably going to squeeze out and maybe push back up into that 12, 13 range. And who knows, maybe go for even a higher high than we kind of saw back there. Let's see. Obvious spam. Yeah, with those emails that I get. I mean, it is. It just they're just trying to. I mean, I don't really understand though, but they're doing whatever they're gonna do, try to promote their products or whatever. I like the phone calls. I've been getting so many phone calls, so many. It's just spam calls. It's insane, and they all literally say like potential spam or whatever it is on the phone. So I don't even open them, but like I'm like, this is insane. Like the amount of calls I'm getting. Car warranty that I don't have, or yeah. UAMY. This is one that I liked a while back, but this thing got destroyed, so I cut it. Yeah, I think I cut it at this line right here, and it's gotten destroyed. But hey, it's starting to kind of start. I say that I guess lightly, because this could change next week. It's trying to maybe firm up, and we can kind of see that the slope to the downward direction is not as strong. So, I mean, hey, it's trying to firm up here around 45-ish. 46 is the low. So maybe there's something there. This is now a 51 million market cap. I'd want to look at. I thought actually, last I looked, because I was in it back in here last year, I'm pretty sure that they had some good earnings, if I'm not mistaken. They had some good earnings. So this stock, I was like, fundamentally is decent. Compared to where it was trading cash-wise and revenue-wise, if I'm not mistaken, were pretty decent numbers, or they were pretty good increases. And now it's just dead. So, hey, I mean, this could be a possible spot. The problem with a lot of these, though, is that you're risking these things under $1. A lot of them have to regain compliance with, let's say, the Nasdaq or whatever to get back over $1. And if they don't, then what ends up happening is, well, then these things are just, dead in the water. And they had a reverse split and or offer and raise capital, reverse split and all that stuff. And then it's like, okay, well, you're going to dilute me. I don't want to be in. So that's the risk with some of these things that are sub $1. I would only like these ones if they have a catalyst upcoming, which, for example, one of them is I have SON, which I do want to add more, but did a pretty nasty downtrend on this one. But they have a catalyst coming in Q1. I believe we should get something here before the end of the year. So, let's see. Wow, SPY's ripping now. Stronger close than we thought here. Look at this. SPY bouncing now. It's pushing it up. Let's see what happens into the close. If it wants to go for a possible green move, it could get there. It's close. I mean, it's it got 40 minutes. It could easily do it. Let's see. Interesting where it held up too. Look at how funny this is. And these are some really good, I guess, technical points to even play some day trades off of too. And then just, going back in the future. This held up right with the pre-market lows. So if you look at this, I'll draw a trend line. Pretty much with pre-market lows is where we held today. So that was a key level. So it's just, pre-market hours is important to look at. Especially when there's some big moves up or down, right? Those are keys. If it was a move up, pre-market highs could be key as well. So pre-market highs are up here towards about 466. Maybe we go that high. Who knows? It's the end of the day. Maybe that's what we had. Pre-market low bounce is nice though. All right, let's see. Oh, VECT is green somehow. No, maybe not really. It's like on 10 shares, 1 share. UVXY. Yeah, it's failing pretty hard with the market pushing back up. Now, what's going to end up happening, I can see this easily happening too. So I have my hedges out for Tuesday, Wednesday time frame. So it's very, very short-term hedge. Probably I have a couple, let's see, about $600-700 roughly, I guess, in those hedges on some of those puts. IWM, QQQs, a little bit here and there. Watch this stuff. Like watch we rip into the close here. We rip on Tuesday, and then we dump second half of next week. you try to you set yourself up, and then you just mistime it. But it's part of the game, right? Part of the game. All right. It's kind of wild to see. Let me just see it. With the market bouncing back, I'm curious to see some of these positions that I also hold. Penn's still red by a lot. Got killed today. Even though the market's text green and it's about to go green. Let's see the airlines. How the airlines looking? Still red, pretty fat red there too. So kind of getting screwed, honestly, both ways, because the longs are down a good bit today. Well, I guess the airlines are up off of where they were. I had a crazy day yesterday, and the market just killed it today. Or there was just, I could have hedged those. I guess, to the downside, even, buy some puts on those after the moves. And then, what about like American Airlines? Down 4%. That's pretty, it gave it all back. It literally gave everything back that it had, which has kind of been the deal, honestly, with a lot of these airlines. They have a good day and they give it all back. Delta had good earnings and give it all back. Same thing here. I mean, the trend has been nice off the lows from December, I guess, but yeah, they're giving them, they're making nice moves and making good strides and giving it all back. QQQ. Let's see what we got on this. I have 378 puts, so of course those are at risk of expiring worthless, but they're out to Wednesday, so I'm going to keep that. And, like we saw, look at these types of moves on QQQ. From 389 to 377 in a day. I mean, if we got that type of move to the downside, you fell that much to $12, you can fall down to 367, or 368 or whatever in a day from here. So, I mean, it's going to be interesting how next week goes, but I'm expecting... I would expect some more volatility. We'll see. Okay, well, that's looking decent to the close. I guess the Dow is down the most today. Boeing's probably green now, though. Boeing has been holding up a lot. Yeah, Boeing's up 0.5% now. Boeing's been super strong. I kind of thought some of the airlines would follow Boeing to a degree, but not really. Boeing's been stronger than them by far. So, I don't know. It's interesting. Let's see. What else do we got here? I'm curious what IWM looks like. IWM, really good bounce into the close. That's a really strong bounce on IWM. Off of where it was. It was down at like 210.50, and now it's at 230 or 213.8, and almost 214, almost the highs of the day. Really strong. Off the bottom, that's a 1.5% move. It's a pretty impressive move. Mesa. I'm curious what Mesa's up to right now. I added one more of those today. I put a bid at 130 on those, and it filled at some point. So I added another one of those. Calls on Mesa. Really strong close now. Let's see. Really strong close. And now we're getting up to this level right here that we had from early in the day. That was our resistance point. Interesting. All right. Having also, you too. Hope you guys, I mean, honestly, we'll keep going to the end of the day, but, this weekend, hopefully everyone has a nice, 3-day weekend in terms of market being closed Monday. So, for those who don't know, market is closed on Monday. So we shall see if that brings us some more or less volume come Tuesday. I don't know if that's a good or bad thing. I'm curious to go back here and check in on, actually, let's go back to this. FinViz, what do we got? We made some progress in terms of advancers, decliners. So while Nasdaq's gone green, we still have about 5,500 stocks declining, 2,600 advancing, 800 hitting new lows, 162 new highs. Same deal, roughly. Energy's been the bright spot, though, clearly today. ExxonMobil, a lot of these energy plays have been the bright spot. And they're pushing hard into the close. Other than that, though, pretty choppy across the board. Pretty choppy. Options flush is here. Well, yeah, we had it. We started off on the stream, right? We were down here. So it looked pretty bad, looked pretty nasty in terms of the lows of the day, and we've been grinding ever since, which is interesting. All right, which unfortunately, right, looking at my small cap list, looking at my position list, everything is down, and it's not even close. So that's great. I did have Baba today. Baba, that was solid. Actually, where's Baba now? Yeah, it's still there. JP Morgan put spreads. Those were nice. Took profits on those. JP Morgan's still getting just probably going to go lower. It's funny though how you're noticing now though that okay, yeah, the markets are doing what they're doing, but I think it's interesting. I have just noticed a lot more. I've been seeing a lot more individual names are really starting to kind of unattach from the market. So like JP Morgan today was an interesting kind of day where it's really kind of detaching from the market trends and from, even the other banks. Wells Fargo, it's detached from that. Disney, interestingly enough, well, they got downgraded today, but I don't think that stuff really matters that much. The problem with these is that when you get a downgrade on a stock like this, long term, who cares? But in the short term, I had calls out to March 160s, which I guess could still work, but I just cut those off because I'm like, okay, now you're at you were actually below 150. Now my 160 calls, for me to break even, it's got to go to 165. I'm like, I got 2 months for that. The pace, this may not happen. So I didn't want to mess with that and just cut those off for a loss. That's kind of the problem with those downgrades. If you have any mid to short term calls, you're getting smashed. Shop's an interesting stock because let's see. Oh yeah, well let's bounce off the bottoms nicely. Hit new lows today though, relative new lows. I guess this year's lows. They're not 52-week lows because we did dip lower in March of last year, it looks like, but close to it. All right, let's see. I'm really curious to see how the indices finish the day here. Half hour to go. And we'll see how we go here. All right, let's see. SBV. Wow, look at that. That's insane. That should halt up if it hasn't already. No, it hasn't. That's nuts. This thing was an idea we had in this box a couple, like an hour ago, and I didn't take it. I thought about taking it, but we didn't take it. And now it's at 350. Would have been really nice. I probably would. I'll be honest. I probably would have sold it all at $3 or most of it at $3. But it's nice. These are good. These have been honestly. These have been there. So I really think that any of these, watching these a really good strategy has been watching the top gainer list, right? Watch these top gainers, and whatever pops hard and then holds up has been there for a secondary squeeze out. So for example, I don't like this chart as much, but like SBV popped up, it pulled back, and then it just sat flat all day, and it just flat all day. And like it was just asking for a couple covers to come in to bring in some volume, a little bit of buying action, a little bit of buying pressure comes in, some buyers start slapping. This thing is asking for a halt up. It's 100%. Hey, maybe this could be one of those that starts the run. I guess it's been interesting. It had a little pop there off the $1 level, hit 2, and then it was just a trender for about a couple of days, and now it's popped again. Really solid. It's cool to see. And that's the thing that you have to understand too, that when you're looking at some of these small caps these days, I really encourage you to do the due diligence and understand what you're doing, what you're buying. Because there are people, I guarantee, who bought this stock, who were buying this stock on these kind of flushes down from the 2s down into the 1 area, right? It's a pretty big move to the downside. But they were doing that because there was a reason why. And most likely they had some fundamental reason. They were thinking this or that or whatever. And, obviously everyone's going to probably trim into these big moves up. But if you held this thing and you're like, hey, this is I like this play. Nothing fundamentally has changed. It's undervalued, whatever. Well, you're reaping the rewards now. Off the lows, obviously no one has an average at 99, but off those lows, you're up like 250%. So if you have an average, again, like we were talking about how that strategy that I'm going to be kind of deploying this year, if I was able to get myself in an average of even, let's say 150, well, we hit $2, I'm up 30%. So that's my first sell anyway. I'm selling 25% off of my average roughly at a minimum. Always. That's always a first sell, unless sometimes it could be less depending upon the news and whatever happens. So you're up 30%. That's an awesome play. Now you're up. Now you let some shares ride and you're up even more. So you just let it do its thing, But that's the power of trusting your due diligence, trusting your play. But you got to have a strategy that gets yourself that keeps yourself alive during these types of moves, even if the stock may not, even if you don't think it fundamentally, is there or whatever. So, technicals on CRBP. CRBP. I actually remember this guy was a beast last year. SPY looks like it wants to go green, man. Wow. Not something I thought was going to happen 2 hours ago. Not at all. Nasdaq is green. Dow was red pretty bad, and SPY is almost flat. All right, CRBP just a deadly downtrend is what we got here. That's what I see. Let's see. Can we connect? Not really. Not the best. It's just been like. Honestly, you probably got a better. Let's see if we can do a trend channel roughly. This better look right here. There's your channel. Until that breaks, you're going to be kind of hitting new lows. So where's that breakout or that break of the channel? That's going to be up here towards like 60 cents. It's got to get over 60 cents to break out of this channel. So that's the trend that it's on. Yeah. Just looking at some news that came out. Pfizer had a product approved just now. Okay. Curious where Pfizer's at. Let's take a look at that. Pfizer is pulled back off the highs, but it's up. Yeah, 50 SMA touch is coming, so that's right here at 54. So you're about $1 off from the 50 SMA. Get rid of this for now. That's coming very, very soon. So we got some support there at 54, potentially on Pfizer. Little mini gap here, I guess you can say, on the daily. Down in here, not huge. Very small gap there we can look at as a possible support or at least a bounce point. You go back to this prior gap right here that we had on the chart. Yeah, this gap got filled. A couple weeks later, a couple days later, it got filled. So, interesting. NPR, BWEN, supposed to moon in Feb and March, regardless of the market. Let's take a look at some of these. BWEN. It's curling a little bit off the bottoms now. It's oversold for sure. NPR. Maybe that's an OTC. Let's see. Boom. So, okay, let's look at the daily on SPY. Did we hit trend line? Not necessarily. Got close. Don't get me wrong. We didn't hit the trend. Trend line was like right here, kind of close, I guess. Almost. This one is like not the best hit, but we get close to that trend line touch on the S&P. 464. So about a $4 bounce off of the lows of today. It's pretty impressive, but that range has been there. It's been what we've been looking at, honestly. Been what we've been seeing. UVXY. Let's get QQQ. The Qs. QQQ. Nice little push. What I'm probably going to do is I have, I'll leave my QQQ. I have IWM puts for next week as a hedge. I might add one more just because they're down a good bit from my average. So I'll probably add one more into the close. It's pretty cheap at this point. And then we'll let those ride into next week. And if the hedge doesn't need a hedge for any reason, then doesn't need a hedge. That's it. All right. Wow, SPV 100% now. 97. It's close. Very close to 100%er. And we're about to get it. Wow. 100% hit. Wow, that's insane. It's going to go to 4. Where are the past resistance points in this thing? Oh, wow. Look at this. You got a gap. I'm surprised it hasn't halted. That's the type of thing. That's an insane play. This is a gap right here from, if it gets over $4, it could go to 5. It's not out of the question, I don't think. That's the thing. This is a stock for, it looks like the 1 minute chart and see, it didn't halt. I'm really surprised it didn't halt. And if you're a long or you're in that thing, you love to see it because these halts could destroy these things. So one of those this morning was, what was it called? See something. I can see if I can find it. This morning we had this play or this stock that was an uplist to the Nasdaq. It was like I forget exactly what it was. I don't have it on here. Let me see if I'll pull it up in Webull and see if I can find it. Because I did touch it. I did trade it today. Briefly. Got to go to my P&L from today and find it. And P&L today is down humongous. That's insane. All right. Let's custom this. And let's go to the 14th. What today is the 14th, right? Yes, it is. 14th. And we got to find it. It is ticker symbol CISO. CISO. So this thing had, the problem that it had was it's a low float. It started pushing. And then it just died because, I'll show you, it started pushing. I thought it would be a possible runner. Now it did, it had a little pop. I thought it could hit 10. It hit 878, close enough. It got close from, where it was in the fives, a couple hours before. But what it did was it had two halts. And the first halt was a halt up after the open. And it went from 725 to 784 halted. It's not like a crazy move percentage-wise. That's in 1 minute candle, it went almost 10% and halted. Well, that's decent, right? That's not nothing to laugh at. And then it had the downside halt, but the halts were 10 minutes both times. So when you have a 10-minute halt, you completely just kill momentum. You absolutely kill momentum on anything on these 10-minute halts. It's insane. So it had those halts, and then it just died, never came back. But on SBEV, look at this thing. I mean, look at this monster this afternoon. This candle right here was a 1 minute candle. Let's look at this candle. It went from 316 to 350. That's a 10% move. A 10% move, but it didn't halt. So it's essentially, right, by halting it, people get tired out. They go somewhere else. They look over here, they look over there, or whatever. They just jump around, and next thing you know, right, who cares? But this thing somehow didn't halt, and it's just kind of grinding up. So it keeps going. It keeps squeezing. Keeps on going. Let's see. You may want to check out cheap profitable value stocks, negative beta, which go up when the indices go down. TKT halt yesterday. The open took it short. Let's take a look at TKT. Yeah, I remember seeing that, I think, yesterday. Look at that fall off. TKT, massive move, halted, hit 467 after the halt, and then just proceeded to fade off. So, honestly, that's been working. Now, it's not going to work forever, but that's been kind of working. The halts, where like you play these things after they halt, and it seems like momentum dies. And momentum dies, people move on to the next shiny object, and no one cares, and then boom, there's opportunity. TKT, honestly, was a great one even today. That faded off another 9% from yesterday. So that's pretty good. SPY's trying to go green. It's like 30 cents away. It can easily do it in one candle, but this is interesting. So, okay. Now the speculation, right, that we had, well, at least that I had, that we potentially could see, I would think, if we saw a true just sell hard into the close, kind of like yesterday, if we saw that today, which we're not getting. If we saw that, then I would be kind of really excited for Monday for bounce plays. No matter kind of, especially if we gap down. Look at XBI back to $100. Crazy. Got very, very close to that 95. But now that SPY just went green. SPY went green. That's insane. Now that just went green. This is nuts. Since SPY just went green, this potentially into the weekend could give, dare we say, a false sense of hope? I don't know, something like that. So I think that's certainly in the realm of possibilities. So Monday or Tuesday, I guess, could be a very interesting day. I'm very interested to see what happens Tuesday. So I got the hedge plays through Wednesday. So we'll leave them on until Wednesday. And we'll see what happens. But despite the hedges, everything else I have today is down. Airlines had a really good day yesterday. Despite the market being down, they had a really good day yesterday. They just unfortunately gave most of it back today, if not all of it. Save is holding better. Oh, yeah, Spirit is holding better than JetBlue. But yeah, they have earnings. I think they all have earnings coming out very, very soon. So we'll see how those go. Not really too concerned about those, but we'll see. This market makes me sad. Yeah, I mean, I hear you on that. Unfortunately, that's the thing. You kind of have to adapt to it and play the backside of these things, or you have to have a strategy, which I'm going to cover. Well, I'll probably have Monday, Tuesday. I'll probably have. I'll be detailing my strategy in terms of my new swing approach and stuff. I'm looking to back test that more this year, but I'm looking to kind of get back into that strategy. And that's a strategy that I really was using more of pre-pandemic. Pandemic turned me off that strategy because I wasn't capitalizing as much. And then, right, of course, now you go through a period now where the strategy would be much more beneficial. But now you can see that the strategies, the strategy that we used during the pandemic is not working, obviously. So you have to adapt to it. There's still runners. I mean, look at SBV. It's up, 250% from the lows. There are still runners. It's not like these things are never going to go anywhere, are going to go away forever. There's good opportunity on the backside. Shorts are making a lot of money, but even longs, there's still opportunity there. You just have to adapt to what you see, and there's ways to play it, and that's what we're going to be, focusing on, obviously, going forward. I still think the airlines are a good play. Exactly. So we've been seeing, I think Delta had their earnings yesterday, and the CEO said, one of the things was business demand. I think, just leisure demand and stuff will be there, but business demand, they were saying, is going to really skyrocket, they believe, in the coming months for spring and summer. And so that's kind of my thought process there, is that we're probably going to see a lot of rebounds. And if you go back to this time last year, I'll go to just American Airlines to show you. I still like the play. They've been building higher lows as of the past couple of weeks, so it's good. You could have got a lower average, obviously. I started buying a little early, so I didn't, and then I averaged down. So okay, I'm kind of even right now on my airline positions, which is fine. I'm in longer term calls anyway, so if we have a big couple of weeks in the airlines, then those can go up 50% and 100% in a month or two, right? If you go back to this time last year, where is it? Oh, sorry. I'm looking at the weekly chart now. So if you go back to February of last year on American goes from, the 15, 16 range, and it hit 26. It's a 60%, 67% move in about 2 months. So they've shown they can do it. Am I expecting that move? Not necessarily. I'm looking at this target right here, some of the highs that we saw a few months back. So on some of these names, there are stocks not American, like you can look at Spirit, which has more range. Obviously, if airlines take a hit, Spirit is going to be one that sees bigger downside. If airlines do very well, Spirit is going to probably do some damage to the upside. So you got to pick your poison in terms of how you want to play it. But there's a lot of ways to play it. And then we were looking at Mesa, which is a subdivision type of play off of American and United, essentially the small jets. This thing last year, during this time frame, went from the 650 range to 17. So this thing by itself, just shares, went 150%. So I think the in the money options should pay really, really nice. That's the backbone of my portfolio. Really, those are the biggest positions in my portfolio. The airline plays for right now. I'm thinking about adding it honestly into the Robinhood portfolio. I don't want to say YOLO it, but I'm thinking about just tossing. I'm going to do it right now. I'm just going to grab some Mesa. I'm going to grab, let's grab 5 of them. I'm going to buy the Mesa calls out to July 15th. $5 calls at $135. Is that what they're going for? It looks like it. Let's go with a bunch. 5 of these guys. Is it going to fill me? Let's see. Orders placed. It might not fill. If it fills next week, I'll buy it next week, whatever. But I like that play for a really nice, I think an easy 100%er if we get the move on the airlines. No, we got to get the move. So, ultimately, right, your downside risk isn't as bad, though, because if, I don't envision, honestly, I really don't, unless the market absolutely just got destroyed. Okay, my order filled. I bought 5 of those in my Robinhood. We'll YOLO the Robinhood a little bit. It's not really a YOLO, but, we'll toss it in there because why not? But this play, right, do the airlines go, unless there's 7 more variants that come out that all of a sudden are horrible. I don't see airlines. I don't see them dumping more from where they are. They're low enough. I really don't. And they provide a lot more value, especially with the recovery and people flying more. They're providing a lot more value right now than some of the tech names that have to now grow into their valuations. So these airline plays in a matter of 2 quarters could be right back up very, very close, if not right in line almost with that 2019 demand. Now, can they keep up? Yeah, it's another story, but they're right back there. And so the growth story there over the next couple of years, as travel demand could be really good, really appealing. So I think there's a lot more value there than some of the tech names. So I think people are going to rotate into those. That's how I see it. Do you plan on injecting more cash? You fall under 25K? We'll see. Maybe. What I would do is I would just liquidate my Robinhood portfolio and add it in there. We'll see though. I don't know if I don't know if I will. It's possible. I really don't see. I guess it's a possibility. We've been down a good bit from the airline plays, which I don't see going much lower, which is a good chunk of the portfolio, and the small cap plays I've kind of solidified into my favorite names, and so I don't see that. I really don't see it happening. I need one to go. The reality is that I freed up some more cash, and I'm looking to day trade more. I had my biggest day trade day in a long time yesterday. It was like $900. I don't day trade. For those who are relatively new, I don't tend to day trade very much. I'll take something here and there if I see stuff I like. Okay, but I was focused in yesterday. I'm like, you know what? Because I gotta take some action on this stuff. I'm not gonna sit here and watch swings get beat down and not do anything about it. Because I'm here every day anyway. So what's the point of me just sitting there and watching it, stuff fall off, even though, hey, I'm holding that stuff and I have a bigger vision for it and these things could run 100%. So, everything can change in one play, right? Obviously, but I'm not going to let that happen and watch. So this week was a good week in terms of hedging myself with some downside protections, number one. Number two, even just day trade. So I don't think it's going to happen. It's possible, but I'll probably add from the Robinhood back in there just so that I can. And I hope I have the luxury of day trading if needed. But that's the idea. That's the plan on that. Sell off last 15 minutes. Let's see. Let us see. Oh yeah, look at that. Now it's pushing up. That's pushing up. Look at that rip into the close. Insane. Should I snag a SPY put for next week? Do we take a shot at something like that? 19 January. No, it's the 19th. The 19th that's Wednesday. Yeah. I'm gonna take a Wednesday SPY put for a hedge downside if this can't hold. This could be a bull trap into the weekend. Everyone's feeling good into the long weekend. The Monday morning comes and just smacks, or Tuesday, and just smacks everyone, and it's like back to the death that we saw this past Monday. Let's see. SPY puts, if you're looking at a 460, I would be looking at like you can play a 460 put. That's out of the money. Of 462 is like $2. I can even grab one of those. 464 a little more expensive. 465 a little less risky for $3. That could be nice. I don't know. Something I think I may just. Well, if we get a little bit more of a rip into the close, I'll do it. And then I'll have myself hedged just probably too much. I'll have myself hedged with essentially all of my day trade profits from yesterday. I'll have them all in hedges for next week. I guess that's one way to do it, right? Make money, use that money to hedge yourself for the downside, I guess, right? And if it works out, hey, you could kill it and be really nice. But averaging down small cap seems to be working for now. Yeah, so that's the thing. I'm pumped for. I'm gonna be kind of talking about my at least new strategy going forward, and it's a lot more, I guess, technically focused in terms of adding down and stuff. And we're going to look at some examples. I don't want to just kind of, talk about a strategy, but then I want to make sure we kind of I want to look back to recent plays that I've been in and how I could have played them better and got my average significantly lower so that, hey, I'm not actually under that much water, and we're within reach of a press release, a pop, a relief bounce, or whatever, taking us right back, to green. How do you vet biotech? I have a video going over due diligence, so that would probably be a good place to go. But I look at a lot of things when it comes down to it: CEO, cash position, threat for offerings, pipeline, what do they got coming up, market cap to cash ratio, market cap to revenue kind of numbers to get a better feel for the valuation number. GNPX is an interesting one. I feel like I've heard that name before. Let's take a look at it. Let's take a look. $2. Oh, it just had a pop. So this one, if it holds up over $2, this could be getting ready for a second leg here. It's got to hold too. Because see how it pushed up, hit 360s, pulled back, right? Held $2. A little bit of a push up, 260s. Now it pulled back, but it's holding twos. It's holding the twos. So that's not terrible setup wise. All right, let's go back to SPYs. Finish to the day. Yeah, we just hit a new high of the day. We did hit a new high just now. Insane. Enough of these holidays. Yeah. Oh man. Let's see. Surprise, NVOS had positive news today and it pulled. Well, I mean, there's no volume obviously, but it's down 7%. It's down like 9%. It's just one of those days, one of those months, weeks, years. That's what it seems like, right? Let's see. Let's go back to this. Well, the advancers decliners has kind of evened out a good bit. That's cool to see, I guess. So we were really swayed to the downside in terms of way more stocks declining than advancing, but that's swayed back. A lot of stocks hitting new lows. A lot more hitting new lows today, and many below the 50 SMA. Same deal there. Okay, SPY barely up. Dow was down 0.5%, which is pretty interesting. Dow down 0.5%. Nasdaq up 0.5%. SPY flat, pretty much even. Interesting. Very interesting. BBIG up to held up today, pretty decent. It's holding over this 375. I kind of like that, honestly, as long as it holds over that level for nice rips. All right, let's see what we got. SPY gonna finish green or red here. 5 minutes left. Watch SPY. Imagine SPY finishes that VWAP. Imagine we like a huge red candle to the close. Finishes that VWAP. Jeez. Where's QQQ at? I got those puts for next week, but yeah, we're fine. 378's fine. If I was at 375, yeah, I would maybe be different story. Lucid Motors. Let's take a look at Lucid. What's Lucid doing? Lucid has the lockup or whatever ending soon. Everyone's been talking about that. But it seems like it's been holding up, honestly, pretty decent. Let's see. 42 is a kind of a key level that I've had drawn in there for a while. Not too much. IWM. How's IWM finishing? That went green. That finished nice and green. We'll see if IWM has a strong bounce back or if it wants to kind of flush. It seems like the pressure has been on though, because it kind of would go like a month or two before it would retest the bottom of this range, and every time it did, man, it would be like bounce right back, and it kind of did that again. But now we're back here again. It feels different this time. I don't know. It feels a little different there. I'll be on GMPX at 215. Yeah, that seems like a better. I kind of like that spot. Baba red to green. Alibaba went red to green. Let's take a look. Yeah. I mean, hey, it was decently green today, and then it fell off a lot. Look at this. This is some interesting volume. We had a 5-minute candle where 1.8 million shares went through. That's pretty big. Way more than the market open. We only had 1 million shares trade at the open. And right now, last 5-minute candle was 300,000. So we had a interesting surge in volume right there. Some big money trying to get in. A little Charlie Munger action. Didn't he double down or something on his Alibaba position? It's funny though when you look at some of these big time value guys, these big time value investors, and it's really interesting to see how they handle like these. I feel like us retail guys can weather and have stomachs. Not everybody have stomachs for like just getting destroyed. Like you're down 50%, you're down 20%, like you're down huge, right? Because you play sometimes for that risk reward. Like, hey, like I'm playing this, I'm in this thing. I know my risk is this. I know my reward could be 100, 200, 300% on an option play or whatever, or even a stock. So I feel like I'm able to handle that differently than like someone like, I don't know, like when I'm pretty sure like Munger was buying this thing, I don't know when, but he was buying it way higher. And the thing went to like $100. Like he was down huge on whatever that. And then, hey, you're talking, hundreds of millions of dollars, billions of dollars. I don't know how much he's dealing with right there, but you're down a lot of money. I feel like those guys invest and, they're good with that 2% or, 3%, 4% per year type of move. They'll get their dividend and they're making so much because they got so much to deal with. So it doesn't matter, right? But when you're down 50 or you're down 25 on a position, that seems, I don't know. Seems like that could be a lot. Okay. Let's see. Yeah, everyone's talking about Lucid next week and how all of the insiders and stuff are able to sell after the lockup period ends or whatever. So they're up huge, right? So why would they not sell? I guess they could. I don't know though if that's going to dump it that much because I think I've just heard that too much. I've heard everyone talking about that, so it's like everyone's buying puts. So had 3 green days this week and I'm even. Yeah, I hear you. I had probably my best green day of all time day trade yesterday, and I'm going to be red in the week. That's just what it is. Day trades this week, I'm up nice, really nice. Made for a much better week than what it was going to be potentially had I not been in any of them. Yeah, why is that? Probably because we got Penn was down this week. Airlines were up and down from last week. I think maybe slightly up or roughly even. We'll see how the P&L comes out tomorrow. But they're roughly right in there. And then the small caps kind of faded out further. I took one of them off and I'm in a couple others. But seemingly the downside on those have slowed for sure. So they're not as bad as they were. But that's part of the game. There's nothing crazy, honestly. I repositioned. I have some cash freed up. I had a hedge now. I have added some room for a hedge, so we have something we didn't have last week, which is nice in case of next week being pretty nasty. We'll see, and then we'll see what happens. I added to the Mesa play. I didn't add any other than I added Mesa as another airline play, so I kind of diversified now across 3 airline positions. Nothing crazy in those, and then I played some puts. I played some put spreads. I'm not counting those as day trades because they were swings, but those made a couple $100, which was kind of cool. So. Honestly, I have to be happy with my progress this week. I definitely adapted a lot better than I had been in terms of just not that I didn't adapt, but like I was kind of just letting it happen in terms of not really doing anything about it. So there's that. I'm gonna grab. Let's just look at these because you can trade SPY options after the bell, 15 minutes after the bell. I'm gonna go out to the 19th to Wednesday, just because we finished a little strong here. I'm gonna go out and I'm gonna look at. These just a cheap one, 460 could be. Yeah, it's gonna be too much time decay potentially if it doesn't move. 460. I'm gonna grab these as one more additional hedge. Let's see. Wait. Back to the chain. 462. I like that better. 462. 462 puts. I'm just gonna snag one. And what are they going for right now? They're going for 190-ish. Let's just pay 190 for one of those out to Wednesday of next week. Let's see if we get filled. They're going for 193 now, 194. Okay, no, we're not going to get filled. We get filled, great. If we don't, we don't. We have 15 minutes or now 12 minutes or whatever to do it. 13 minutes. It should fill. There it is. There it is. Got a SPY put, so we're hedged. We are hedged for next week. I pretty much took yesterday's profits, and used them all to hedge. So that's that. Cancel play at 4. I mean, there's the thing is, right? I am all with you on that. Is there are a lot of plays like that are just, they don't make any sense. It seems too good to be true to be able to get these things down, these low and whatever, right? I am with you, but as we've said, low can go lower, right? It can. So you have to make sure you're at least ready for that potential further downside. And it doesn't make sense. It comes down to what the market's going to do and where the money's flowing. If the money's not there, money's not flowing there, it doesn't matter. End up with 100,000 shares of junk, no cash. Yes, that's my biggest thing, which is where I have now developed the strat for this year that is going to change that. And so I'm not going to just dump all my stuff that I currently have right now, but I'm definitely not going to be swinging with the size to the degree that I have on some of these names for now, percentage-wise, the portfolio. That's at least how I see it. So we're getting kind of, honestly, almost up to pre-market highs there on SPY. Here's a big picture on SPY as we wrap things up. So we kind of bounced today. We tried to hold up, and we'll see if that bounce continues into next week. We'll see. If not, then no big deal. Nothing happens. It is what it is, and we resume to the upside. If so, if this does flush further out next week, we will see what happens. I wouldn't be surprised if we come down and test that 450 level. So I'm thinking that's a possible zone to target next week. 450s. As crazy as it may sound, I think we can get there. This week, we went from 457, 473, and then back to 460, and then back to 465 to finish it out. So, there is absolutely crazy volatility right now in just SPY. Just literally just SPY. Not even talking about other stocks, just literally just SPY. Let's see. Go back here. Let's wrap it up with this. Advanced decliners, new lows, new highs. Yeah, so new lows. Again, right? Market finished green, Nasdaq green, SPY green. But really, what was green, guys? What was green? Microsoft, Apple, the big tech names. They were green today. That's it. That's why it was up. That's why the indices are up. So today was another one of those days where the indices are being, again, they're deceiving because it's showing you that, hey, the market was super nice today. I don't think it really was. I think that there was actually a lot of stuff that was down a lot more. I'm curious what DraftKings is up to these days. Let's look at this really quick. DraftKings down 4%. That is interesting. You would think with some of these tech bounces that DraftKings would be one of those stocks that bounces. No. Did ARK finish up? ARK did finish up, surprisingly. So ARK was up today. And then I wanted to look at something else, but I forgot. So, okay, whatever. Let's see. Going through anything moving in the after hours. Let's take a peek. Give it a second to load up, and then I'll probably wrap things up pretty soon. So, long weekend, nothing on Monday. No, market's not open. Unfortunately, it means we won't be able. We'll do a live Monday night, I guess, technically now, right? Not Sunday night. We'll do live Monday night. I got to watch my Eagles play this weekend. Well, I think, hey, a lot of games this weekend. We got Monday night too. Oh man, maybe we'll do a Monday afternoon because they put a playoff game Monday night. We'll do a Monday afternoon stream. Because they put a playoff game Monday. Yeah, I'm pretty sure. Let's take a look at this. What do we got? So we got. Is it even a good game though? Let's see. Yeah, Cardinals Rams. That's going to be good. So that's 7. We'll probably do a live 5. Well, this is Central Time. So probably do a live 5:30ish, 5:30 Central Time on Sunday. Monday. Sorry, and then we'll get futures and all that stuff. Tomorrow is at 3 o'clock, 7, and then we got a 12 all right. So my Eagles play at 12 on Sunday, which is cool, awesome. I'm not expecting much, but hey, I mean, the Bucks are all over the place. I don't know. So we'll see what happens, but I'm not getting my hopes up. They snuck into the playoffs barely, but hey, I could see a win. Best rushing team in the NFL, so we'll see. All right, that's how I'm going to wrap things up, and we'll see what happens next week. Really a chop fest day. We had some lows that looked pretty nasty at one point, and then we kind of came back to even on the day. So my speculation is Tuesday is the day of like, okay, everyone in the long weekend, everyone's feeling good, and then boom, hit it hard, pull hard Monday, Tuesday, Wednesday, and then that's the dip. That's the dip to buy. I think the bounce point for a lot of these names, because again, even though SPY is kind of holding up today, we saw a lot of under the surface names still getting destroyed. So, I mean, look at Affirm, one of these names. Affirm, I don't know. Let's see. Affirm is, did it finish under? Yeah, Affirm was down 4%. It finished under $70. I mean, these are the names that, hey, Affirm flushes to 65 and then bounces to 90. That's a massive, like that type of bounce play is what we're going to get. I think if we get one more really hard flush in the market, and those should be just massive opportunities. So that's it. Thanks so much for watching, guys. I will see you in the next. Stay tuned for tomorrow's video. We'll update the portfolio. We'll talk about all the hedges I have. I just essentially hedge with SPY, QQQ, and IWM puts, essentially with my profits from yesterday. That's it. And that's one way to do it. And then we bought a little bit of Mesa. I trimmed out of one of my small caps to free up cash, and that's it. So we'll talk about that. I want to do dive into essentially some of the day trade strategies that I have been utilizing and taking advantage of, which have been really nice. And they've been fun. And we'll talk about those in the future videos. But